We're seeing buying of the US 10-year. We're seeing buying across the curve, actually, and we're seeing those yields coming down. And a lot of people saying this is to do with the Fed. It isn't just the risk aversion and the seeking of perceived havens. It is also to do with the Fed narrative and how that is evolving. Of course, European bond markets were open yesterday, so we've seen that European bond markets had some time to price in both of those factors yesterday. So that's perhaps why we're seeing a little bit of divergence between the 10-year and the 10-year in Germany. Iron ore prices, worth mentioning, down 2%, a seventh day of losses. Property in China in focus, and the Brent crude price down at $87. Tom?
Okay, look at your futures briefly. The biggest moves coming through for the CAC current, looking to add 0.9% upside across these three main indexes is what's been flagged by the futures, Anna.
Okay, so futures suggesting we go higher, and Tom, as we've been talking about, Wall Street actually managed to end in the green yesterday, and this was to do with the changing Fed conversation. So away from the horrors of what's going on in the Middle East, the nature of the conversation around the Fed changing. We saw this, as our guest reminded us, at the end of last week with Mary Daly's comments. Then we add in two more Fed officials just over the last couple of days, talking about the way that the move higher in yields is actually doing the Fed's work for it. Of course, then that triggers yields to come down. And where does that leave us? But that is what the Fed has been talking about of late. And so that has had an impact on stocks stateside, and we see it have an impact on stocks here in Europe this morning. So the FTSE 100, the CAC 40, the IBEX, all moving higher this morning. Interesting to see the FTSE moving with the pack, because yesterday the FTSE was going its own way as a result of higher oil prices, of course. It was responding differently to some of the increased geopolitical threats. The Bloomberg Dollar Index up by 0.1%, the pound down by 0.1%. So slightly more movement this hour than we were seeing at the start of last hour around FX markets. But this is the interesting move that we've been talking about in sovereign bonds. And we do see that the cash treasuries trade stands out in contrast to what's going on in Europe. But that is partly to do with the fact that Europe was open yesterday. So we got to price in some of what was being indicated by US Treasury futures into Europe's session yesterday. So we see yields going a little higher here in Europe, but actually still dealing with that drop in yields over in the US and across the curve, down 13.8 basis points on the US 10-year Treasury. Tom, what about sectors?
Well, across your sectors, a reversal of fortunes for one of the leading sectors yesterday, the leading sector, which was energy, of course, on the back of that oil price spike. And travel and leisure was at the bottom of the list on those concerns linked to airlines, of course. And you tie that to the crisis, of course, in Israel. Today, the picture is different. Of course, oil prices have come off a little bit. And so you're seeing energy as a sector currently flat. And you're seeing gains coming through, 1.5% gains, so pairing the losses of yesterday for the travel and leisure sector. You're also seeing gains of more than 1% for food. Technology is up 0.9%. You can tie that arguably to the lower yield environment that we're seeing, at least in the session today. And the consumer products sector is gaining 1.3%. So pretty solid gains across most of these main sectors. Retail, the consumer, industrials and financial services, banks all adding gains of more than 1%. The one sector that's looking a little flat, again, on softer oil is energy, currently unchanged as a sector, Anna.
Okay, so that's where the sector picture leaves us. Everything in the green, it would seem, across Europe. Sophia Horta-Acosta joins us from the Markets Today blog to talk about where these markets head. And it's interesting, I was just referencing the iron ore price. Iron ore price is dropping. You might have thought that would weigh on mining stocks here in London. That doesn't seem to be the case too much. The overall Fed message seems to be getting the spotlight from European investors. But the reason I mentioned iron ore, because that really does link to Chinese property. And I know that the country garden developments are something that, through the Asia session, have been much discussed.
Yeah, exactly. It's interesting to me that it's kind of a balance when European markets open, what is happening in China and what is happening in the US, and which one is going to kind of lead the picture here in Europe. And today is very much the US. China, though, keep an eye on that. Markets just reopened this week. Mainland markets, iron ore falling to a 7-week low. Country Garden used to be China's biggest property developer by sales. I really want to hone in on this number because it's really, really significant. Sales in September fell 81%. So you're really seeing concerns around the debt problem at Country Garden. It's warning that it's probably unable to pay its upcoming debt. That's filtering through to the real economy, really deterring home buyers because they don't trust that this company will survive. Let's see if that also filters through to the rest of the industry, and that's the concern right now in markets. You're seeing softness in the property sector again in China, and this is after months and months of support from Beijing. It's clearly not working to revive sentiment, and what you're seeing is if you do see a protracted drop in sales, and we saw the Golden Week was also very disappointing when it comes to sales, then more dominoes could potentially fall.
Okay, so link that to the iron ore story then, Sophia. Currently down 2%, as Anna was flagging, 110 per tonne for iron ore. That is very much based on softening expectations around the demand for steel linked to that property sector in China.
Yes, it was. I mean, the iron ore prices did have a good run, especially after we saw the support measures from Beijing. And the expectation was that would not only be better sentiment in the property market, but there will also be more building because seasonally September tends to be stronger. It's after those summer months. We know weather, hot weather and rain tends to slow that down over the summer months. So this was meant to be kind of the comeback for activity. And we did see some signs that some companies were actually looking for that. And now we're getting a warning from the property market. Essentially, if Country Garden, this is a well-run developer. And I should say, actually, if you look at how it's communicating with the market, this is very different to what Evergrande had done when it was defaulting. It's actually telling investors that it's struggling to repay debt. It's telling investors transparently that it's hired CICC and Houlihan Lokey, two restructuring firms, to help with its debt repayment and to really kind of fix its plan when it comes to debt. So this is not an Evergrande story, and yet it's really having an impact on the property market again. I say this is something to watch for the fourth quarter as everyone gets really excited over how strong the US economy is.
So, Sophia, take yourself back to when you were based in Hong Kong. And you're looking at Hong Kong stocks now gaining about 1.4% on HS Tech, HSI, Hang Seng Index is up about 0.8%. If you strip out property then, and that all-important property sector, and you say we need to remain focused on that for very good reasons, but if you strip that out, are there green shoots that are coming through for some parts of this equity market?
Hong Kong is interesting because it's so reliant on what's happening in China's economy, but also very, very geared to what the Fed is doing. I mean, Hong Kong is an economy that follows the Fed. The HKMA, if the Fed raises interest rates, the HKMA follows. That's because it has a currency that's pegged to the dollar. So it's a very interesting place where two of the world's biggest economies that are moving in completely different directions impact the stock market. What you're seeing now is a complete read across from the Fed. Positive Hong Kong, negative mainland. You're seeing a drop of 0.8% in the CSI 300. For me, that really shows that traders in Hong Kong are looking at a very beaten down, cheap market that will benefit from better liquidity, better improving financial conditions, as Anna was talking about. If we have tight financial conditions now, but Fed speakers kind of talk about that and say that that's doing the hard work, then the expectation is that will improve. And you've seen that play out in Hong Kong, which is, often caught between what's happening in the US and China.
Sophia, thanks very much. Sophia Holter-Acosta from the Markets Today blog. And to keep across the stories she's talking about there, go to the front page of the Bloomberg UK website. You can click through to the Markets Today blog from there, or type TLIV GO onto the Bloomberg terminal. Let's just get an update on some of the regional market action that we're seeing coming through from the Middle East. And remember, this is the third day of trading for most of the markets in this area, and for all of the ones on that, well, certainly most of the ones on that screen. It is the third day of trading. And what we saw on the first day of trading on Sunday, in many cases, was a sell-off. We saw that more than 6% down on Israeli markets, more than 1% down on Saudi markets, for example. So what we're seeing now, a bit more stabilization after yesterday's bit more stabilization for markets in the region. The shekel, the Israeli shekel, interestingly, also regaining its footing a little after the central bank vowed to support the currency.
Okay, coming up, BlackRock's Philip Hildebrand says the IMF should frame discussions this week around the new economic reality. We're going to talk EM. That is next. This is Bloomberg.
I've always been a person who's just been attracted to hair. I like to sit and think and theorize how I can manifest these visions that I have for braiding and how I can take something that may seem like it's a line drawing in my mind and apply that to someone's scalp.
We are the only culture that has hair that grows out of our head the way that it does. Anyone from the African diaspora is born with this amazingly curly hair that can be shaped into a variety of different ways of expression.
I want Black people to love themselves for how they naturally appear, and also to appreciate the cultural practices such as braiding that our ancestors have practiced for centuries.
Selling the Patriots, you're not selling the packaging company. I guess you don't like to sell things, right?
I really don't. We try to create a family environment in everything we're involved in. People want to be part of something that's bigger than themselves.
Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
Great question.
Great question.
That's a question I get all night.
Bloomberg, top experts, great questions.
This is Markets Today. Just coming up to 11 minutes into our European trading session, seeing a bounce in European equities, reflecting on the changing Fed conversation and how that pushed stocks higher in the US yesterday. Let us get an update on some of the individual stocks that are on the move this morning. Joe Easton has an update for us. Joe.
So it's a bit of a mixed picture in the fashion retail stocks this morning. We had a warning from About You over in Germany. This is the online clothing retailer, bit of a rival to ASOS. That one actually gaining despite them cutting their sales guidance to the lower end of a previous view due to some destocking. And I did expect that to weigh on ASOS. We're actually seeing ASOS down around 2%, but that might be more related to the data that Sophia was discussing earlier from the BRC, which did note that warm weather once again is weighing on sales in the retail space in the UK. Next, though, coming back up a bit, that was down 4% yesterday, the biggest drop in 3 months, as JP Morgan warned that they do expect a sales decline. And finally, at the bottom here, LVMH reporting earnings after the close, the owner of Louis Vuitton. I was reading JP Morgan's note this morning, and they think there's a potential for them to outperform given the weakness and the worries about Chinese sales and also aspirational buyers. So JPM thinks that one could be in focus tomorrow morning. Then over in France, there's a couple of individual stocks to note. So Ellis, now this is the catering company that supplies airports, and they are selling a stake to a Brazilian investor. That one broke just after the close of trading yesterday. That one is rising. And then in furniture, we've got Maison Dumont. This is kind of like DFS in the UK, but over in France, they've got a bit of a warning out saying that they've also seen a slowdown in sales, and that one at the moment is down 3%. We've got an unch down at the bottom here on Euro API, not opened yet, but again, I looked at the pre-market indications, and that one does look like a double-digit decliner in the opening auction. This is the chemicals firm and ingredient maker that supplies into nutritional goods that we had in stocks to watch, giving us a profit warning this morning. Then there's just a couple of ratings changes to run through at the moment. AP Moller Maersk, the big shipping company. Now, Morgan Stanley is equal weight. They do think that there could be a slowdown in shipping rates at the moment, but note the company has a really strong balance sheet, so they're not going as far as recommending selling. iFarge, Jefferies recommends you buy this one. This is a construction company, sold off a lot given worries about construction, particularly in the US where they do a lot of business, but they say that is oversold now. And finally, Fluidra, this is a swimming pool maker over in Spain. Now, Exane, BNP Paribas say they think there could be an order slowdown in that one, so swimming pool demand is peaking according to Exane, and that one down 1.4% today.
Okay, Joe Easton from our equities team, thank you very much indeed, with some of the stocks on the move in the session today. Now to the macro picture. The IMF and World Bank are holding their annual meetings in Morocco this week. BlackRock Vice Chairman Philip Hildebrand says the IMF should frame discussions around the new economic reality.
The reality is we have very subdued growth. If you look at the average measures of GDP growth and economic activity in the U.S., you see that the economy has been basically growing at barely around 1% for the last 18 months. We expect that to persist. That will mean we'll have the longest period of very low growth outside of a recession, even if we can avoid a recession. In Europe, we're seeing flatlining activity.
Okay, joining us now for more analysis is Senior Portfolio Manager for Emerging Markets and Responsible Investing Lead at Amundi, Esther Law. Esther, thanks for joining us in the studio. Let's start with that comment from Philip Hildebrand then, a view on softer growth and less ability for central banks to step in with rate cuts. Does that view extend to your emerging markets world?
Yeah, I think definitely, especially with the recent pop-up in the yield, in the core yield. The whole question on easing has also been postponed, in the emerging market space, even though the emerging market central banks, as we discussed last time, were the first to hike and they hiked a more magnitude. So definitely it's a space that we are watching. And to be honest, this growth actually started, I would say, as early as almost June, when we had, first of all, the banking crisis hitting the US and then the China slowdown. So we've been kind of digesting it throughout the whole summer, the slower growth story.
What about the emerging market space then, Esther? Good morning to you. And what we're seeing, the tragic events in the Middle East, of course, making people think about risk aversion and what that does to emerging markets. Are you seeing a rethink from investors? What do you observe?
I think the event, very unfortunate, is another reminder that there are still, a lot of conflicts that is going on, and we should not forget about them. But for this particular one, I think the overall consensus is going to be highly likely to be localized to the region. So that highlights again maybe from the portfolio allocation perspective. You may want to maybe allocate a bit more to Latin America, for example. You've got a commodity angle and you are a bit away from the conflicts. And obviously, another obvious, I would say, observation is the oil supply. You've already seen from the oil prices and also the dollar strength on a bit of the risk off.
And you flagged to us in your notes that you want to be looking for strong idiosyncratic stories within EM. Where are you finding those idiosyncratic EM stories?
I can think of two. So the first one is India. We know that it's really an upcoming story. It has been actually in the equity space way before this year. But this year, I think the fixed income side, we are also boosted by the index inclusion expected by the JP Morgan local currency market index.
So is that a flow story then?
Yes, that's a passive story, but we should also remember the positioning is quite light. So that means that the market is not positioned for that. And also with the currency, it's been one of the more stable ones compared with peers here today.
Yes, and I'm doing some reading around that as you flagged it. It seems that with that inclusion might come more fiscal scrutiny and that might drive others, not just the flows story, I suppose, into. That's the argument also, is it?
There's also that plus the, I would say, the risk-adjusted returns. We think about not just the yield, but the volatility of both the FX and also fixed income.
Where else are you looking then, Esther? Because I know that you've got other ideas around idiosyncratic stories outside India.
I think another similar one is also a low, if you like, lower beta one, and it's Kazakhstan. It's also another potential index inclusion candidate. It's got relatively strong, the matrix due to the oil reserves, and it's yielding about 15%, 14-15%. It's a real yield of about 4%. So I think, again, portfolio diversification is important, and really looking through the matrix and any potential flow story.
How much of this is tied to, when you're looking at the likes of Kazakhstan and India, is this on an assumption that China isn't going to be coming back in a strong way for EM? Is this a way to shelter from subdued growth coming through from China? Or do you still want exposure to those areas even if China comes back in a meaningful way?
It's a very good question. I think looking at valuation, I still think China obviously is still quite a big part of the key benchmarks, right? Both in the global ag index and as well as the GBIEM, the local currency one. It is not a country that, even if you're underweight, you can't completely have no positions. So I think for the other candidates, this is really for a diversification. Even if China makes a meaningful comeback, at the moment, the valuation is still less attractive compared with India and Kazakhstan.
Esther, we're seeing IMF meetings taking place this week, IMF and World Bank meetings taking place in Africa for the first time in 50 years, I think, really shining a spotlight on the way that the growth story in those past 50 years between parts of Asia and Africa has really diverged. How do you are there areas of Africa that are of interest to you? Is this too much? I mean, we talk emerging markets, then we talk frontier markets. There's a bit of both there, but where are you focused as we head into these important IMF meetings, where there'll be a lot of conversation about sustainability and source of debt, of course?
Yeah, no, I think sustainability remains the focus. With the yield at this level, the core yield at this level, it's pretty hard for some of these countries to tap the capital market. So I think any way that they can attract capital into the country via different sustainable way, either social or green, will be very much encouraged. And there's a lot of initiatives really helping this to happen.
Okay, Esther, thanks so much. Thanks for joining us. Esther Law, Senior Portfolio Manager for EM Sovereigns and Responsible Investing Lead at Amundi. Coming up on the programme, we'll talk about basic resources and mining, iron ore plunging to its lowest in 7 weeks. We've got the details next. This is Bloomberg.
That's me, Max. What's up? How are you? I have been writing about Wall Street for almost 15 years. And what that means is I write about feuds and rage and rises and falls and comebacks. And every now and then, I also write about a couple of villains. Thank you so much. And now, I am about to do something new and very, very scary. We are making a show, and it's based on Bloomberg Businessweek magazine. So what is this show about? It's a show about money, power, culture, pop business. We're gonna ask complicated and profound people about their ideas, their careers, their lives, their risks, their failures, their imagination.
It's so incredibly liberating not to care what other people think.
I was giving my tools to other communities. I wanted to bring those tools home.
Tune in. Please, really actually tune in. I desperately need an audience.
The top names in business are on Bloomberg.
The market is starting to look over the Fed's moves into falling interest rates.
We actually think that core inflation is going to fall a little faster than the Fed expects, and that will allow them to start cutting rates by March of next year.
You get a price spiral when labor markets are tight. In manufacturing, labor markets are still very tight right now in the US.
Nobody covers business like Bloomberg. Context changes everything.
On the David Rubenstein Show, peer-to-peer conversations, I uncover the untold stories of the world's most successful leaders. Watch Wednesdays on Bloomberg Television.
This is Markets Today, 23 minutes into your European trading session for this Tuesday morning, and European stocks are on the rise this morning, up by 1.2% on the Stoxx 600, so seeing some robust moves higher, reflecting the moves on Wall Street yesterday. The EU is planning to announce anti-subsidy investigations against Chinese steelmakers, that according to reporting by the Financial Times. Meanwhile, iron ore prices have been falling to their lowest level in 7 weeks as turmoil in China's property sector continues to plague steel markets. Let's speak now to Bloomberg's Martin Ritchie, who's in Shanghai. Martin, good morning. How significant are the moves that we're seeing then?
Yes, so to put this in context, the EU and US are trying to broker an arrangement on trade, particularly in commodities like steel and aluminum. They're trying to create what's called the global arrangement on steel and aluminum to create what's a sort of trade bloc between the two of them. They need to fix some old tariffs that were in place on EU steel to the US, but as part of that bargaining, the US is asking the EU to drop tariffs, to place tariffs on China. The likelihood is this won't have much impact because not a lot of steel already goes to the US and to EU from China. But what we're seeing here is the emergence of a sort of broader agreement between the US and EU to shape the global flows of steel and aluminum. But also at the same time, they will be at this meeting in Washington later this month, they will be discussing things like critical minerals and other areas in these sort of emerging supply chains.
Yeah, Martin, we were talking about this EU probe in the meeting. It does strike you as something that might have been effective about 10 years ago, but it seems a little odd now. We'll see how it unfolds. Martin, what are you looking for next? Good morning or good afternoon for you. In terms of the iron ore market, what are the potential next catalysts?
Yeah, so we've seen a pretty jittery day on the metals markets. I think iron ore is down. I think it might have gone down below $110 for the first time in maybe more than 6-7 months. So it is a very jittery day because we've seen Country Garden, the big Chinese property developer, effectively issue a warning it might be heading for a default and signaling a possible restructuring. That's brought to the fore again all the fears about demand from the Chinese property sector, which is still an ongoing problem for iron ore in particular. Iron has actually been quite strong this year, relatively speaking. It's held up quite well, just because there's been demand from other areas in China's industries. What we're looking for is whether that can be sustained because the prospects for property remain very weak.
Yeah, indeed. Martin Ritchie joining us with the context out of Shanghai. We appreciate it. Currently, iron ore down 2.2%. Coming up, we're going to discuss Keir Starmer's crucial conference speech as the UK Labour leader says he will rebuild Britain after 13 years of Conservative rule. We are live in Liverpool next. Stay with us. This is Bloomberg.
you've built a successful company, but you might not want to run it for the next 10, 15, 20 years, or do you? And if you didn't, would you want to go into government? If the president called you to serve our country, would you go into government, or would you start another company?
I love what I do. And I feel like I have this luxury with 23andMe that it keeps evolving. You know, we started out just as a consumer company. We're thick in research. We got into drug discovery in 2015, and now we're getting to the delivery of care. So I've been really lucky with 23andMe that it's been endlessly interesting. And I'm surrounded by incredibly talented, brilliant individuals where I learn from them. And what I always advise people to do is, like, you should take jobs where you're learning. And if you stop learning in a job, then you should quit. And, like, frankly, when people leave 23andMe, like I say, if you're not learning anymore, you should move on. So I'm 100% committed to 23andMe. That said, my other passion is other direct-to-consumer. Like, I want to build out a true consumer-empowered healthcare world, like one that is outside of the existing system. And there's no greater force than government.
Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything.
This is Markets Today. 30 minutes into your European trading day, let's get to your top stories. Civilian deaths escalate as conflict continues in the Middle East. Israeli Prime Minister Benjamin Netanyahu warns retaliation has only started as Hamas threatens to kill hostages. The global fallout continues. The US warns Iran to stay out of the conflict as EU foreign ministers gather for an emergency meeting. In markets, stocks rise and 10-year treasuries surge after dovish comments from Fed officials dim rate hike bets. Tom, we're seeing a lot of resilience in European equity markets today, given the geopolitical turmoil we were talking a lot about yesterday. And that's the way the session played out in the United States. A concern with geopolitics in the morning. By the afternoon, the spotlight had shifted very much to the Fed conversation.
And it seems that's where the spotlight remains. Lower yields, of course, the money moving in to the Treasury markets, and that as well is supporting what is going on in these equity markets. So the gains coming through across the benchmark so far in this Tuesday session here in Europe, 1.2% across the benchmark. The DAX over in Germany adding 234 points at 15,362. And here in the UK, the FTSE 100 up above that 7,500 level, adding 77 points, gaining 1%. And despite the fact that energy as a sector is the least well performing across your main sectors. Let's flip the board then and see how it is shaking out in terms of the dynamics sector by sector as we adjust to, at least for now, lower yields and slightly softer oil prices coming through. So there's the energy sector, just down 0.3% again after the spike in oil lifted that to the lead, gaining across the sectors on Monday. Other standouts for you, the auto sector, that's lifting the DAX, that's adding a little over 2%. Travel and leisure was one of the worst performing sectors yesterday. Today it's gaining 2.3%, and some of those concerns about airlines and the implications of the Israel-Hamas conflict start to be readjusted. Utilities getting 1.6%. You've got gains of a similar magnitude for the banking sector and financial services sector as well. Basic resources, we tie this to the iron ore story. You have seen softer iron ore prices currently down about 2% on concerns once again about Chinese property and the fact that there wasn't a big pickup in demand, it seems, over the holiday period in China. Basic resources adding just 0.7%, which in the context of today's market moves is rather subdued. So that is the read across your main sectors. Worth flagging as well, technology getting 1.6%, of course, lower yields beneficial to that sector.
Yes, so only those energy names going lower, everything else sector-wise in the green. Let's talk about UK politics. It is to the fore because UK opposition leader Keir Starmer is expected to use his speech today to warn the country faces a difficult path to recovery. Bloomberg has seen excerpts of his speech in which he will tell Labour's annual conference that, quote, what is broken can be repaired, what is ruined can be rebuilt, as he urges voters to put their trust in him. Let's get to Bloomberg's Lizzie Burden, who joins us now from the Labour Party conference with a guest. Lizzie, good morning.
Thanks, Anna. Yes, we are here in Liverpool at Labour Party conference. We're waiting for the opposition leader, Keir Starmer, to make his speech, making his pitch to be Britain's next Prime Minister later today. But of course, Hamas's attack on Israel remains a key theme here in Liverpool. And I'm joined now by Bronwyn Maddox, Chief Executive of Chatham House. Thanks for making time. What's your interpretation, first of all, of how this attack came to be, how Israeli intelligence failed to foresee it?
They weren't expecting it. They thought that Hamas had been satisfied, if you like, with more permits for people from Gaza to go into Israel, all these kind of things. I think you can call it a kind of wishful thinking. But Hamas had also encouraged Israel to think that, and the Israeli intelligence was looking elsewhere, really at the West Bank, where there's been a lot of trouble for months.
So how politically damaging is it for Benjamin Netanyahu, the Israeli Prime Minister, who, of course, is the self-styled Mr. Security?
He absolutely is, and I think even to use the words politically damaging doesn't quite capture the shock of what's happened. It's beyond the calculations of normal politics. He will be judged by this when the reckoning comes, but at the moment everyone is just focusing on what he intends to do next and what other countries might do to try and stop this escalating.
Well, how long can the unity around him last?
It can last some time, I think. Obviously, we haven't seen in Israel recently anything approaching unity. We've seen huge protests against the Netanyahu government's proposed reforms of the Supreme Court and so on. But the shock of this assault has united the country. And so for a moment, a long moment, I think people will be united behind him. But the questions are going to be there.
Of course, it's also a blow to Saudi Arabia's Mohammed bin Salman. He's been trying to normalise relations with Israel. Has this attack effectively brought that to an end?
I think it has for the moment. The Saudis have been careful to say, look, this isn't anything like a done deal. There's a lot, interest for both sides to do this. On the other hand, we have yet to see the Israeli government's willingness to make any concessions to the Palestinians, particularly on the West Bank, and that is going to be much less likely. And Saudi Arabia was going to ask the US a huge price for this gift, if you like, to the President of the United States, and that price was something that the US was probably going to be uncomfortable with, particularly civil nuclear power.
So we've seen absolutely horrific scenes out of Israel. What could resolve the situation? Has the chance for a two-state solution passed?
I wish I could stand here and say, let's just resume talks about the two-state solution. That's been slipping out of grasp for many, many years now, partly because of Israel's expansion of settlements on the West Bank. But at the moment, I don't think we're really in the realm of diplomatic talks between Israel and the Palestinians, though almost certainly some kind of talks with more moderate Palestinians are going to be one of the things that resolves this crisis, but that may be quite a way away.
I mean, you have to wonder whether peace with territories as entwined as these can ever be brought about.
The intensity of the feelings about territory is hard to convey for people who haven't been there, how small the distances are, how strong the feelings are about these different patches of the Earth's surface, but I think the feelings go very, very deep, and diplomacy, is the only road, but sometimes even the only road is blocked.
And the West was already questioning whether it could afford to continue its aid to Ukraine. If the situation develops into full-scale war in the Middle East, do you expect that US support would dry up in favour of prioritising Israel?
I think given a choice between Israel and Ukraine, the US would, in a heartbeat, choose Israel. It's heart and principle over principle, if you like. It doesn't face that acute choice at the moment. It can support both, but it does face a choice in its attention, if you like. And I think this shock of this in Israel is really, it was grabbed, understandably, American attention. So Ukraine, I can understand why President Zelensky might be worried, and he was already battling to retain American attention.
So where does that leave the UK?
It leaves the UK in a position that is not the US. and not other countries, able to condemn this, as it absolutely has done, and as the Labour opposition has done absolutely rightly, but able to talk to other countries perhaps more easily in the region, including Turkey, including Egypt, and just see what can be done to prevent this escalating into a wider conflict.
So I know you're speaking to the Shadow Foreign Secretary David Lammy later today. What's your advice on how Labour should approach this going forward?
At this exact point, it's straightforward. The condemnation, which has been quick to come from Labour as well as the government, is absolutely the right thing, the condemnation of Hamas and of this appalling attack. Beyond then, I think Labour has been trying to position itself as a more modest version of global Britain, if you like. And so this business of having links to many countries, of being able to bring them together in quiet conversations, that is emerging as a British strength after Brexit.
And speaking of Brexit, we heard from the Shadow Chancellor Rachel Reeves yesterday. I didn't hear the B word mentioned once in that speech. How do you interpret that?
I think both parties want to put it in the past, whatever economic conclusions you draw from it. And the economic numbers do not look pretty, but it's very much a where do we go from here. Labour is, to my mind, possibly guilty of wishful thinking, though, of saying, look, we're not going to be part of the single market and the customs union, words it will use, even if it won't say Brexit, but that it wants still a much closer relationship with the European Union, one that the European Union may not want to give.
All right, Chief Executive of Chatham House, Bronwyn Maddox, thank you very much. Back to you, Anna, Tom.
OK, Bloomberg's UK correspondent Lizzie Burden on the ground for us, of course, at the Labour Party conference with the analysis there on the conflicts between Israel and Hamas and views on Brexit here in the UK. Thank you. Coming up, we're going to speak with the CEO of UK power supplier Octopus Energy. The conversation with Greg Jackson, that's next. This is Bloomberg.
In 2018, the IPCC did what was called the 1.5 report. What was the difference between what a 2-degree world looked like and what a 1.5-degree world? And the catastrophe to the planet between those two poles led everybody to conclude that actually the job is bigger. We have to go to net zero. And that's a transformation of the global economy on the size and scale that's never occurred in human history. So that's a kind of daunting task, but it's full, I think, also of challenge, opportunity, the chance for innovation, and the chance to have the private sector play a fundamental role in making that change happen.
Next week on AI IRL.
I do think it has a tremendously positive effect on democratizing technology. I mean, just imagine what it must feel like if you are a country in Latin America, Sub-Saharan Africa, or in other parts of the world where you just don't have either the money, because you need a considerable amount of money, or the very significant GPU computing capacity, or the data to build any of all of these things.
Markets countdown in Europe. From the financial centers of the world, Bloomberg Markets European Close with Guy Johnson in London and Alex Steele in New York. Real-time numbers, real-time analysis. Weekdays.
Welcome back. This is Markets Today. We are 43 minutes into the European trading session. You're seeing across the European benchmark gains of 1.3% across your sectors. The lead coming through from real estate, posting gains of 2.4%. Bottom of the list is energy, the only sector in the red so far in the session, down 0.1%. Speaking of energy, European natural gas has extended its rally as rising tensions in the Middle East add to global supply risks ahead of the Northern Hemisphere's heating season. Despite the recent rally, European gas prices remain well below the highs seen last year during the early days of Russia's invasion of Ukraine. Very pleased to say we are now joined by Greg Jackson, the CEO of British renewable energy company Octopus Energy, and by some measures as well, the UK's second largest retail supplier behind British Gas. Greg, thanks for joining us in the studio. Let's start on the gas supply story then. Do we need to be bracing for further volatility?
Yeah, good morning. First of all, we're going into this winter a lot better prepared than last. Supply chains have been rewiring. Germany's built liquid natural gas terminals at record speed. And we found that demand, last winter we could reduce demand 15-20% without a huge impact on consumers' comfort or on industrial output. So we go into this winter better than last. But look, supply's still tight, and you see the jitteriness. For example, I think wholesale gas prices are up about 10% over the last couple of days. So it's a worrying time. Obviously, by the way, worrying because of the horrific humanitarian impact. But also, once again, it just shows that when we are so dependent on gas for our energy, we're always going to be subject to what's going on in geopolitics, which is why, among other reasons, we need to move to cheap renewables.
And thinking about that reliance on gas and reliance on power from other places, not just on the gas side, but thinking about the winter, you say we're going into the winter much better prepared, but we still could find ourselves reliant on power imports coming through from Norway and other parts of the Nordics. Is that an area of concern? How important will that be this winter, do you think?
In the gas world, a heterogeneity of supply is a good thing. It better enables us to handle, kind of what's going on in different parts of markets. That's the rewiring we're seeing, the ability to get gas from more places. But look, if we'd started building, more wind farms when the gas crisis began, even before Russia's invasion of Ukraine.
And I know you've spoken about the leadership role that the UK did have, and your questions now in terms of the build-out of turbines. But before we get there, in terms of this winter, you say we are in a better position, but in terms of the affordability for homes and consumers and households, are we the difference in terms of pricing that's likely to come through for households this winter, and is the government doing enough?
Yeah, so first of all, wholesale prices are still 2 or 3 times where they were before the crisis. Now, last year at one point, it hit 15-fold. So we're in a much better position, but it's not. We're still in an energy crisis. For households in the UK, last winter the government made universal intervention. Without it, the average energy bill would have been £6,500, and instead it was £2,500. This winter it's going to be around the same price. And I think for those households who struggle, those who are most vulnerable, we're going to need extra support.
And thinking more broadly about the UK story around energy and the UK investment story, let's think about what we've heard from politicians on both sides of the political aisle in the UK. We've heard a lot over recent weeks. If we start with the current government, a lot of people looking at what Rishi Sunak has been announcing around EVs or around HS2 and asking what that does to the investability of the UK. How are you thinking about the investability around renewables, for example, here in the UK?
First of all, I think with renewables in particular, there is a vast pool of private capital waiting to be deployed. Octopus alone has $29 billion to deploy by roughly the end of the decade. The biggest problem is we can't get the planning permission and the grid connections to bring that capital to bear. And ultimately, it's consumers who lose out, because if we could build this infrastructure, we'd be able to bring energy prices down, increase security, and, of course, reduce emissions.
Is that onshore or offshore wind or other sources?
Every source of renewables. And I think, look, that's just one picture. But across the globe, investors are absolutely queued up to put in place the capital we need to tackle climate change, make energy cheaper. But we have to reform the monopoly parts of the system, the regulations that prevent it being deployed.
And to be clear, I mean, you're investing heavily overseas as well in some of these projects. Is that precisely because the UK has become less investable because there are better opportunities beyond our shores?
Yeah, look, I think capital goes where it can be most readily deployed for a reasonable return. And so currently, the competition between countries is where can they allow building of infrastructure to be done quickly and efficiently. And for example, what you're seeing now is a patchwork of measures as all countries try to unblock this. So, you know, in Spain, you've got a very rapid planning permission, you know, as little as 10 days permission in renewable development zones. France is introducing renewable development zones with just a few months to get permission. France has got fantastic grid connections. So capital is going to be finding the places that it can most readily start to put spades in the ground to build this infrastructure.
And just this week we heard, well, yesterday we heard from Rachel Reeves, the Shadow Chancellor, talking about rewiring Britain. You've mentioned the grid, and what should be the priority when it comes to fixing issues around the grid?
Yeah, so on the grid, it's the same picture in pretty much every advanced economy, and we can learn lessons from what happened in broadband. More quickly we open grid up to contestability and allow different innovative solutions from companies that are willing to invest the capital to build new infrastructure, the more quickly we'll unblock these problems. So India and Brazil both have contestable grids. The US is looking at it. And I think the ability to bring not only new capital, but new ideas into grid development is absolutely critical.
Greg, on the size and scope of Octopus now, 6.5 million customers, or thereabouts, correct me if I'm wrong on that, operating in 17 countries, revenues last year of £4.2 billion. You're not profitable yet. You've digested a lot in terms of acquiring additional businesses. Are you becoming a little unwieldy? Are you worried about moving away from your kind of startup roots? And how focused are you on that need to become profitable?
Energy's got to learn from other sectors. We're currently undergoing a revolution in energy, the energy transition, that is greater than the internet revolution. I mean, this is absolutely necessary to defend our species and every other from climate change. So in the way that the greatest companies in the world, Amazon, Apple, Facebook, Google, were built, so we need to build a company in energy. The reality with us is we've got phenomenal backing. We've raised $1.5 billion onto our own balance sheet from some of the biggest investors in the world. Another $6 billion, $7 billion in infrastructure, and it's only just beginning. If we wanted to be profitable, we could do so tomorrow. But actually, the opportunity to build a company of global scale that's using technology to drive down costs during the transition, not to put them up, well, I think it's too important to leave behind.
Okay, and on that front, you're talking about all the money that's coming in. What about what you're spending it on? I know that you recently took on some businesses from Shell, as Tom was talking about expanding the business, the home retail building business over at Shell. What other areas are you looking at in terms of M&A, in terms of acquisitions?
Yeah, so look, in the UK, where we've now got up to 6.5 million households, the biggest job is to bring those households electric vehicles, electric vehicle chargers, solar and battery, help them reduce their dependence on global energy system, and of course electric heat pumps. Electrify everything. In other countries, our job is to go to the same scale as the UK. Incredibly, Japan is our second biggest branded market. And I think when you've got a brand that can work in the UK and in Japan, you've probably got a brand that's got global appeal.
Okay, it's amazing how the Octopus works globally then. Thanks very much, Greg. Thanks for joining us. Greg Jackson, the CEO of Octopus Energy. Let's have a quick look at where we are on markets this morning then. Up by 1.3% on the Stoxx 600. We'll get a breakdown of what's moving in just a moment. 8:51 here in London. This is Bloomberg.
So Fabian, talk to me a little bit about the ocean. It covers 70% of the planet. It gives us food. It gives us jobs. It gives us, of course, oxygen. We're taking too many fish out. We're polluting it. We're making it warmer. And only 3% of it is protected. What frustrates you the most about this?
The basic frustration is our ignorance. Our ignorance about how integral ocean is to not only our well-being, but to our existence. And for far too long, we've been using the ocean as an endless resource in a garbage can. Imagine our planet is a three-dimensional system. The ocean represents 99% of our world's living space, about 3.4 billion cubic kilometers of volume, within which the vast majority of biodiversity lives and thrives. And that's what we're beholden to. That is what makes us possible as a species.
Slice through the noise. Forget the noise. Ignore the noise.
Is this just going to be noise?
Just noise.
It's noise versus signal.
Now, more to the point. What is the lesson or the observation?
This is Markets Today, 8:54 here in London. We are just coming up to an hour, of course, into the European equity trading session. And European markets then, Tom, pointing a little higher this morning.
And we have a line crossing from Iran's Supreme Leader Khamenei denying claims that Iran was behind those Hamas attacks on Israel. Of course, we had the Wall Street Journal reporting suggesting that Hamas was supported and directed by Iran. And a number of officials have come out and pushed back on that, officials from Israel and the US questioning and suggesting that more intelligence needs to come through. For now, it is the Supreme Leader of Iran denying claims that Iran was behind those Hamas attacks.
So that's the latest on the politics, the war ongoing and action very much on the ground still. Let us move from that to what is happening in markets. And we are seeing linkages through, of course. Interesting divergence between the sovereign bond stories in North America and Europe. A lot of that, though, Tom, to do with the fact that the US bond markets were closed yesterday for a public holiday. And so we see all the response today in terms of geopolitics and the Fed's changing story around recent rate hikes and higher yields. And so we see yields on the US 10-year, for example, well, across the US curve, actually going higher. Whereas in France, in Germany, we see those yields, we see the yields going lower in the US, and we see them going higher in Europe as a result of the fact that US markets were closed yesterday.
Yeah, you're seeing about a 5 basis point move higher for the UK 2-year at 488. But as you say, the focus really is what's happening in these Treasury markets on the back of both the safe haven play, it seems, but also those Fed officials coming out and suggesting that a lot of the work has been done for it already by the tighter financial conditions and the run-up in yields that we've seen, of course, over the last few weeks. And also, of course, touching what's happening in the energy markets. And currently Brent is down 0.3% after the price spike that we saw yesterday.
Yeah, and another divergence there because gas prices continue to rise here in Europe. We saw a substantial move relative to any other assets, a really substantial move. But of course, gas prices are so volatile, which is why very few people have to pay the spot price, of course. But gas futures then for Europe and also in the UK up substantially once again. And this, of course, in connection with disruption to flows, Chevron in Israel. We talked about that a little bit yesterday in the programme.
European markets currently up broadly across the benchmark, 1.3%. As you can see, futures in the US pointing to gains of about just 0.1% on the S&P E-minis. Across your sectors here, it's real estate up 2.3% at the top of the list. That is it for the markets today. You can get insights, of course, from the rest of the team on the front page. Stay with us. This is Bloomberg.
Obviously, we were trying to create shoes for me to wear in the Olympics, and that was happening pretty quickly. And then just understanding a new industry and how shoes are even made. But as we went down that path and started to just learn and research more, we learned that shoes have not been made for women. What that means is a shoe is made off of a last, which is a mold of the foot, and it's the mold of a man's foot used to make women's sneakers. And I think it took time for us to really grasp that because, you know, we've been in shoe stores and we've gone to the women's section and it's like, no, there are shoes for women. Like, what's this over here? And then to really understand, like, all of that is marketing. This is just a man's shoe, like, in a different color. And so that kind of eye-opening experience was just like, okay, we got to do this. And even more than making the shoes, like, there's a deeper purpose here. Like, women deserve better and we shouldn't be an afterthought.
Bloomberg UK, your source for news and analysis covering the biggest challenges facing the UK government, economy, financial services and markets.
Tax cuts should not be the priority. It's about a credible plan for growth over the next 2-3 years.
In this post-Brexit world, how do you see actually servicing your clients?
It was disruptive and it's going to have implications to how capital raising works.
Now we're having the perfect storm in the UK.
Watch Francine Lacqua Thursdays at 9:30 a.m. only on Bloomberg, your global business authority.
From New York City, in London, in Sydney, from Washington, in Tokyo.
9 a.m. in Beijing and Shanghai.
Good morning, everyone.
Have a great evening.
Here's what I'm watching. You do not want to miss this story.
He's there, the kind of upside.
Newsmakers and market movers. This is The Pulse with Francine Lacqua.
Good morning and welcome to The Pulse. I'm Kriti Gupta in London, in for Francine Lacqua. Here's what's coming up on today's program. Civilian deaths escalating as conflict continues in the Middle East. Israeli Prime Minister Benjamin Netanyahu warning that retaliation has, quote, only started. This all comes as Hamas threatens to kill hostages. Macron and Scholz met in Hamburg as the EU says it's urgently reviewing assistance to the Palestinians after several member states protested an earlier announcement that aid would be suspended. We're live in Brussels. Plus, 10-year Treasury surging after dovish comments from Fed officials dim those rate hike bets. Geopolitical concerns fueling a flight to safety. Let's take a quick look at how the European markets are trading. Look, you are seeing a lot of green on the screen. A lot of this is defensively led. And I do mean defensively in terms of stocks. But look, you're also getting some headlines geopolitically and from the IMF as well. They're saying that they're warning of stubborn inflation, weak global growth in 2024. They're also talking about some of the moves in the actual growth rate pulling back just a little bit. That is going to be crucial as we talk about whether or not this is actually going to be the slowdown and the pace of the slowdown that we were expecting even just 7 days ago. Nevertheless, green on the screen right now. You are seeing outperformance right now in the French and German indexes. German index higher by 1.5%. But I think the key question that everybody is asking is what does monetary policy do now, especially in the case of a geopolitical tension. This is going to be crucial in terms of the Federal Reserve hike when you see the odds completely change. Look, back on Friday, the odds of a November rate hike was over 30%. Now, down to 12. This is significant here simply because it brings about the question, if you start to see more upward pressure in commodities, does that then ultimately kind of have a ripple effect into the inflationary story and then ultimately the central banking answer to that? Or do central bankers basically play on the defensive and say, look, we're not actually going to be doing that? A lot of cross currents here. We're going to digest that in just a few moments with our markets guest. But for now, I want to tell you about the trade that has been outperforming, and not just today and not just yesterday, but in the last about year and a half. And a lot of this is going to be in the defense stocks. We're talking about geopolitical conflict right now. Naturally, you're going to see a lot of people kind of near a lot of the defense bids. And I don't mean defensive as in big tech stocks. I mean defensive as in aerospace and defense stocks. Specifically, the proximity matters here because you can see as the war in Ukraine broke out, in March of 2022, this is a trade that has been outperforming, and this has a fundamental tailwind to it as well. The idea that you are now seeing defense budgets for a lot of European and American governments actually increase. So it's no wonder that some of these European stocks are going to outperform. That's a trade that could, by the way, unwind just given how much it has moved. Now, of course, we're going to go back to our top story of the day, of the week, and probably next few months. The escalation in the conflict between Israel and Hamas has entered a fourth day with at least 1,500 fatalities reported. The U.S. has said security assistance is on the way. President Biden due to speak later today. At least 11 Americans have died, with more understood to be held hostage. Joining us now with the latest is our Israel Bureau Chief, Ethan Bronner. Ethan, give us the latest. What kind of support could we expect from the United States?
Well, the Israelis are saying that because they had such a rapid, massive call-up in the last 2 or 3 days, 300,000 soldiers sent down to the border for this expected ground invasion, that their equipment was stretched. They also say that when they try to watch from the air to pick targets, that they don't have everything they need. So it looks like that kind of thing. I would guess also the Patriots, the Iron Dome, the anti-missile system, which has been stretched by all of the rockets that have come in from the south, and the fear that some may come in from the north from Hezbollah. That would be my guess.
Certainly a lot to digest as we kind of navigate the situation. In the meantime, Benjamin Netanyahu said that retaliation has only just started. What does that look like? Give us a timeline here of how long this could be expected to go for.
It's very hard to know. I mean, one of the things that has happened here since this very brutal attack on Saturday by Hamas is a kind of shift of Israeli paradigm, a sense that they felt completely surprised, shocked, and horrified, and that they are going to do everything they can to take out the Hamas infrastructure so that it can never occur again. They're talking in very dramatic terms. As I said, 300,000 men have been called reservists. It seems to me it'll go on for some months, and it seems to me that it's going to be quite horrible for the people on the ground.
Certainly something we don't wish on anyone, but we know this conflict is going to be lasting a while. Bloomberg's Israel Bureau Chief Ethan Bronner, we thank you for joining us and hope that you stay safe alongside your team and your family. Now, look, that's just one part of the equation. At the same time, you're seeing markets not just digest the geopolitical risk that Ethan just outlined, but also the monetary policy risk. And I think that's where I want to go next. Ian Steely, JP Morgan Asset Management's international CIO for fixed income, joins me right here on set. Ian, pleasure to have you. Thank you for joining us this morning. Look, the geopolitical risk is one thing. Let's put that aside for a second. Let's talk a little bit about the bond volatility of the last 7 days before we even got the geopolitics of it all. You are now hearing a lot of Fed speakers come out and say, look, maybe that bond volatility did the job of a rate hike for it. Did it?
And it's not, I think the important thing is it's not just been the bond volatility of the last 7 days. It's really been the bond volatility of the last 3 months. Yeah. We've seen this huge repricing in long-end yields, whether you look at 10-year Treasuries, 30-year Treasuries. And I think importantly, we've taken out a huge amount of cuts that were priced into next year. So for the Fed officials who were thinking the market was getting ahead of itself, that they were going to effectively hike rates and then almost immediately start cutting, that's been pushed out. And it does feel that, listening to some of the speak yesterday, there's a lot more comfortable that the market is doing the Fed's job for them, and maybe they won't have to go quite as far.
But when are we going to see the repercussions of that? Because if you're looking at this pain on the long end of the curve, I think the consensus here is that's not going to show up in the housing market unless it stays that painful sustainably. Do we get there? Do we end up seeing kind of this long end have a ripple effect into the U.S. housing market?
Definitely, if we stay where we are, we're going to see that. And I would argue that we're already starting to see some of those lagged impacts feed through when you look at lending standards, when you look at credit card debt outstanding at obviously high levels. You know, the housing market isn't really doing anything at the moment. It's pretty stagnating because who wants to get a mortgage at sort of north of 7%? Yeah. So it feels like this is coming through. Now, we're likely to have a pretty decent Q3 from a growth standpoint, but we see a number of headwinds as we go into the fourth quarter. And I think that's what the Fed officials are looking at. Fourth quarter into next year, we've done an awful lot of tightening. Why don't we pause? Why don't we take a step back, breathe, and just see what the implications are?
So what's the trade here then? I mean, do you expect this volatility, especially on the long end, to continue? I mean, you're already seeing a complete turnaround off the Fed speak today.
We are, and I think what you've seen is, the market again got very excited that we were going to have to see more more hikes, or at least higher for longer, and we're seeing a little bit of reversal of that. I think some of it's technically driven, but I think from take a step back and say, look at the movement we've had over the last few months or so. We're now at yield levels for bonds that we haven't seen since pre-financial crisis. If you look at a global government real yield index, we're basically at the average that we saw between 2003 and 2007. So for the people that were saying, financial crisis to pandemic was the new normal, maybe that's now the abnormal, but you go back even before the financial crisis and we're at those levels. So it does feel like long-term bonds are a lot more interesting. I obviously would say that as a fixed income person.
I think you're a little biased here.
But no, definitely it does feel like if you haven't owned bonds, if you've been underweight bonds for a while, you should be looking to get back into the market.
Okay, so if you're underweight bonds and you want to get back into the market, what is the trade then? Because I feel like maturities really matter here. What's the trade-off?
I think it's high quality fixed income, because when I look at some of the lower quality fixed income, I still think spreads are too tight.
Yeah.
And I think it's the intermediate part of the curve, because the big move will be what we call a bull steepening. So the front end of the market, we should see curves renormalize. Yeah. And it's the front end, it's the belly of the curve that should do well in that environment. Long end bonds will obviously be your flight to quality bid. We saw that yesterday. Yeah. But as we go through the cycle, you'd expect it to be the 5-year part of the curve that should be the best performer.
I mean, Ian, one of the things we talked a lot about in terms of the bond volatility the last, I want to say 2 weeks or so, specifically when you saw the momentum really steepen, talk to us a little bit about the VAR shocks that perhaps some of these bond traders are going to be facing. What is the bond market not prepared for?
I think when you look forward, again, when we've got bank earnings coming out and we know what happened to the regional banking system back in March when we were looking at some of the unrealised losses they were sitting on, that's the concern. You've got people that are sitting on big unrealised bond losses. Are they going to be forced to sell into this? Is it going to exacerbate the move, or has the move happened? So when we look at some of the positioning surveys, it does feel that things are cleaner than we were. Everyone was obviously on the bond bull market for a while earlier this year. It does feel a lot cleaner, but you still have to take into, as you said, there are still going to be hidden cracks in the system which are going to be impacted, and what are the knock-on effects? Ultimately, that's probably going to be knock-on effects that are negative for growth, which ultimately means in the long run, you probably want to own bonds.
Yes, okay, so very quickly, you said the hidden cracks in the system. I usually associate that with what people say about the BOJ, that at some point the JGBs are going to completely break the entire market everywhere. That hasn't happened yet. 30 seconds, do we still worry about the BOJ?
I think we have to worry about the BOJ. I think they are seeing a world where they're behind the curve and they should be normalising, but they're also going to normalise very slowly, because I think their understanding is that they could have a big impact on global markets. What will happen, though, is if they do start to normalise when the rest of the world is really slowing and going towards maybe central banks shifting policy towards easing, then it might not have as big an impact.
Makes a lot of sense. Ian Staley, that's why we bring him on the show. That's why we pay him the big bucks. We thank you, as always, for your crucial insight. JP Morgan Asset Management's international CIO for fixed income. Coming up on the program, how is Europe reacting to the Israeli-Hamas conflict? We talk live to our correspondents on the ground as the EU performs a U-turn on aid for the Palestinians. This is Bloomberg.
I've always been a person who's just been attracted to hair. I like to sit and think and theorize how I can manifest these visions that I have for braiding, and how I can take something that may seem like it's a line drawing in my mind and apply that to someone's scalp.
We are the only culture that has hair that grows out of our head the way that it does. Anyone from the African diaspora is born with this amazingly curly hair that can be shaped into a variety of different ways of expression.
I want Black people to love themselves for how they naturally appear, and also to appreciate the cultural practices such as braiding that our ancestors have practiced for centuries.
Wall Street is waking up. Europe is already trading. And Manus Cranny and Danny Berger are making sure you have the news, data, and analysis you need to set your agenda. Micro, macro, and everything in between. Manus in New York and Danny in London follow the money around the globe. Take a daily deep dive into risk and help you make informed decisions for your trading day. Watch Bloomberg Brief, weekdays at 5 a.m. Eastern, only on Bloomberg. Context changes everything.
Conversations that matter and the insights you need. This is The Pulse. I'm Kriti Gupta in London. We are getting some breaking headlines here crossing the Bloomberg terminal right now. China weighing new stimulus, saying that their higher deficit will ultimately meet the growth target. Now, look, this is significant. You are seeing an immediate reaction in the dollar and the U.S. strengthening in the offshore yuan, 728 on that currency pair. The onshore not moving as much. Of course, that makes sense, given it is the onshore. What's important to keep in mind is, again, this is having a ripple effect into the dollar, just given the weakness. Copper not moving a ton off of it. But the idea here is simply that they are weighing that new stimulus. We know that the PBOC has been very, very vocal in terms of making sure that their economy can actually stand pat, and doing it through different measures, not just through the rates, but through stabilizing the FX market as well. And looks like they are now exploring yet another way to stabilize that, in addition to some of the pain in the property market. We'll keep you apprised of all the headlines as we get them. We go from China to right back to Europe. EU foreign ministers are set to hold an emergency meeting later today. The EU saying it's urgently reviewing assistance to the Palestinians, dialing back on an earlier suspension. Let's get more from our European correspondent, Maria Tadeo in Brussels, all over this story. Maria, a U-turn from the European Commission on Palestinian aid. How did we get here?
Well, a U-turn, I would even say a double U-turn from the European Commission on this issue of funding to Palestine coming from the European Union. Yesterday, it was just chaotic communications from the Commission. It's such a sensitive issue. It's such a sensitive time. And as you say, the day started with a pledge from one commissioner suggesting that the entire development package to Palestine would be halted, that there would be new budget proposals would no longer be considered. That was watered down then by the Commission. At some point, you even had two commissioners publicly contradicting each other. Now, when you look at the situation in terms of where we stand now, what we know, as you say, is that the European Commission will carry out a review of the funding that it gives to Palestine. They say the goal of this review is to make sure that no European money whatsoever goes to fund or is misused for terrorism purposes. But they also indicate that no humanitarian aid would be cut off. Overall, this episode, what it shows really is, again, this very shambolic communications within the European Commission, but also it really shows not just a lack of coordination, but really a different level almost of sensitivity behind the scenes between the different countries of the EU when it comes to what to do with the Palestinian people at this point, and also highlights some of the fears from some officials that they really believe there is a looming and very serious humanitarian crisis that is about to play out.
Certainly something I'm sure you're going to keep a very close eye on. In addition to what else we can hear from the meeting today, what else is on the agenda?
Well, definitely coordination. And if you look at everything that happened yesterday, you could argue they seriously need some coordination, especially because up until now, we've seen the European Commission and the European member states and the individual countries obviously say very publicly that they stand with Israel, that obviously they condemn the events that took place on the Saturday. But as I say, there is a different degree of sensitivity in terms of what is the response when it comes to Palestine. The other issue on the agenda agenda has to do with the hostage situation. We know that, unfortunately, we saw those pictures on the Saturday morning, really just terrifying, of people that have been kidnapped. The whereabouts are not clear. The exact number of people also not clear. But as you know, European countries have a duty to not just track down their citizens, but also find a way to bring them back safely home, if that is possible at this hour. So that will be debated too at this meeting that would take place today, as you say.
Certainly something I know you're going to be all over. Bloomberg's Maria Tadeo in Brussels. Thank you for joining us with that update this morning. I want to stick with the European story and go over to Germany. German Chancellor Olaf Scholz and his French counterpart Emmanuel Macron are vowing to support Israel after Hamas launched its assault over the weekend. Bloomberg's Oliver Crook joins us now. Oliver, Scholz and Macron meeting again today. What are they focused on?
Yeah, as you say, Kriti, this was really a meeting that was scheduled outside of all of this, but this sort of took the headlines. And remember, France and both Germany have said that they have nationals that have been either killed or have been taken hostage in the events that happened in Israel. But really, this was a trip that was supposed to try to bring some of the tension down that exists between Macron and Scholz and some of the sort of friction that we've seen within the EU. So yesterday, they were at this Airbus factory. You see the pictures there, which is really a symbol of German and French kind of unity and cohesion on industrial policy, something that has been lacking, according to a lot of the sources that we speak to, on EV policy, on defense policy, on the economic vision, on nuclear energy. So really this was an idea of having sort of a more informal meeting where they have cabinet level talks and they have these conversations outside of sort of all of these intense pressures. So the cabinet is convening today. We'll get the fruits of that discussion in about an hour's time when Macron and Scholz both speak in a press conference in Hamburg.
And at the same time, there's reports that the EU is looking at Chinese subsidies, and this time in steel. What do we know about that?
That's right. So this is why it's so important to have unity within the kind of two major players within the EU, because you're tackling absolutely enormous economic and political struggles internationally. And so what we understand from the FT is that the EU is launching a probe into Chinese subsidies of its steel industry. Remember, we had that on EVs. And the difference now from our reporting as well is we understand that the United States is also sort of a part of this, a part of the discussion. And this is all about the discussion of friendshoring and bringing kind of a united front on economic policy versus China between the EU and the United States. And so the dates to watch are next week, October 20th. You have a summit in D.C. where we have the EU leaders, or EU leadership arriving there and meeting with officials in the U.S. So we understand to hammer out this proposal on China, but also to deal with another long simmering issue between the EU and the U.S. By the end of this month, if they do not have an agreement, we get the Trump tariffs kicking back in on steel and aluminum that Biden suspended 2 years ago. So this is another issue they're going to have to deal with in D.C. next week.
Yeah, things just got a lot more complicated for the commodities market. Bloomberg's Oliver Crook, thank you for that update for us from Berlin. I just want to recap some of the headlines we got earlier in the hour. This coming out of China kind of relates to what Oliver was just talking about there. They are now weighing new stimulus, a higher deficit expected to meet their growth target as well. Off the back of that headline, you did see some strength in the offshore yuan, which looks like has now been paired. I think the key word here is weighing that stimulus. We still don't know what that actually looks like. Regardless, we will keep you apprised of that as we know more. Plenty more to come this hour. Stick with us. This is Bloomberg.
That's me, Max. What's up? How are you? I have been writing about Wall Street for almost 15 years. And what that means is I write about feuds and rage and rises and falls and comebacks And every now and then, I also write about a couple of villains. Thank you so much. And now, I am about to do something new and very, very scary. We are making a show, and it's based on Bloomberg Businessweek magazine. So what is this show about? It's a show about money, power, culture, pop business. We're gonna ask complicated and profound people about their ideas, their careers, their lives, their risks, their failures, their imagination.
It's so incredibly liberating not to care what other people think.
I was giving my tools to other communities. I wanted to bring those tools home.
Tune in. Please, really actually tune in. I desperately need an audience.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights.
How has that shaped your strategy for the bank? Is this a new normal? Is this like a catalyst? Do you think we're in a new phase for dividend policy overall?
That's a great question. I'm Francine Lacqua, and this is The Pulse, every weekday at 9 a.m. only on Bloomberg.
The top names in global leadership are on Bloomberg.
The conflict between the U.S. and China has escalated so much. This is one of my greatest fears, that the small nation is forced to choose sides.
Bloomberg. Context changes everything.
Conversations that matter and the insights you need. This is The Pulse. I'm Kriti Gupta in London. Let's get a quick check on some of the other stories we're following for you around the world. Bloomberg has learned that EU merger watchdogs are set to order Illumina to sell cancer test provider Grail, undoing a $7 billion acquisition that had closed without EU permission. It would be the biggest escalation in a long-running legal fight over the deal, which was vetoed by the Commission last year over competition concerns. Over in the UK, the Financial Conduct Authority says Odey Asset Management is closing its wealth business. This comes a month after its founder, Crispin Odey, was accused of sexual misconduct. The embattled asset manager has been shutting funds as a part of a reorganization in the wake of the allegations against Odey. The 64-year-old, who was ousted from his former firm despite disputes, the allegations. Workers at GM's Canadian plants are on strike after wage talks failed. Unifor, the union representing more than 4,000 GM employees, is trying to get the automaker to match a deal signed with Ford that includes wage increases, cost of living allowances, and pension improvements. GM is already dealing with strikes in the U.S. by United Auto Workers. And shares in Samsung and SK Hynix are moving higher on news that the Biden administration will allow them to ship key U.S. chip-making gear into China to grow their plants in the country. The decision removes a key overhang for the chip makers and allows them to operate in the world's biggest chip market long-term. SK Hynix warned last year that escalating U.S. restrictions may force it to close or sell its major plant in China. Coming up on the program, we're going to discuss the ongoing tensions in the Middle East and how global oil and energy markets are reacting, from natural gas to actual Brent crude. There's a lot to digest. Stick with us. This is Bloomberg.
In 2018,
the IPCC did what was called the 1.5 report. What was the difference between what a 2-degree world looked like and what a 1.5-degree world? And the catastrophe to the planet between those two poles led everybody to conclude that actually the job is bigger. We have to go to net zero. And that's a transformation of the global economy on the size and scale that's never occurred in human history. So that's a kind of daunting task, but it's full, I think, also of challenge, opportunity, the chance for innovation, and the chance to have the private sector play a fundamental role in making that change happen.
This is Daybreak Europe. I'm Kriti Gupta. Let's get to the stories that set your agenda.
Taking you from the U.S. market's close.
A lot of this was priced into the U.S. session.
To the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in every weekday at 6 a.m. London time, only on Bloomberg Television.
Civilian deaths escalate as conflict continues in the Middle East. Israeli Prime Minister Benjamin Netanyahu warning retaliation has, quote, only started. This comes as Hamas threatens to kill hostages. Macron and Scholz meeting in Hamburg. This as the EU says it's urgently reviewing assistance to the Palestinians after several member states protested an earlier announcement that aid would be suspended. Plus, 10-year treasuries surge after dovish comments from Fed officials dim those rate hike bets. Geopolitical concerns fuel a flight to safety. Good morning and welcome to The Pulse. I'm Kriti Gupta in London. European natural gas has extended its rally as tensions rise in the Middle East. Meanwhile, crude oil dipping after posting the biggest jump in 6 months. Joining us for a look at the wider impact of the escalation in the Israel-Hamas conflict is Bloomberg Middle East and Africa anchor Yusuf Gamal El-Din, joining me right here on set. So we've talked about the geopolitics a little bit. Talk to me about this commodity reaction. Was the oil move yesterday an overreaction? Is the natural gas move today just on point?
I think what we're seeing in Brent and WTI is a pause for breath after you had the biggest move in about 6 months. You think to take away from some of the research notes that I've been looking through, like FG Consulting, for example, they're saying, look, this is something that is going to play into next year in terms of supply and demand. You're likely to see OPEC Plus hold the course into 2024 to keep prices where they're at. So they're forecasting $85.90, but not just now or in the end of Q3, Q4, but all the way into next year. And they're saying that OPEC Plus is going to have to do a lot more to keep it at that level. I'd also point out on the natural gas side of things, you had a physical outage, which is very different than the possibility of an outage in the crude oil story. Double-digit gains yesterday. Today, we're up again as much as 7.3%, which is the highest level since mid-June on some of those European gas contracts. So the Tamar gas field in Israel was shut down. Chevron said, hey, out of security concerns, we're going to have to temporarily suspend that. The thing is, this is one of the largest gas fields in the region. Israel wanted to be an energy exporter on the gas side of things, and now the Egyptians are raising the red flag, and they're saying we're seeing a drop of 20% in the gas that we get for our energy needs.
A lot to digest here. Yusuf, you're sticking with me. I want to bring in another expert. Cornelia Meyer, Chair and CEO of MRL, joins the program now as well. Cornelia, let's pick up on what Yusuf was just talking about, this massive move that we're seeing in the commodity space. He was talking about natural gas. I want to bring the conversation back to oil, because one of the bull cases for oil right now is that Iranian supply is just going to get cut tighter and tighter, more sanctions on the way. Your take about the likelihood of that case?
Well, I think what you've seen over the last 6 months or so is actually Iranian production come up to about 3 million barrels a day, with the US not being quite as stringent on imposing the sanctions because of the war in the Ukraine and the sanctions on Russia. However, when you look at it, when you drill down, where is Iranian crude going? It's mainly going east to China. 80% is going to China, and it's mainly refined in those small refineries called the tin pots. And they have very little to no contact, financial contact with the US. So Iranian crude may not be quite as much affected as was feared, initially, and that's probably why you have seen the price of oil come down just a wee bit from yesterday.
Cornelia, you've seen quite a few of these clashes over the years, and the big debate around what is the energy risk premium that needs to be baked in to accommodate for the geopolitics. What do you think we're with that today? What dollar amount would you put on that?
Well, it's very hard to put a dollar amount on it. I think actually where you see a real geopolitical risk premium would be on gas, because we've substituted, especially in Europe, from the risk with Russia to a global risk. LNG strikes of LNG workers in Australia, or now the Tamar field being shut down. Oil, I think it's baked in right now, the geopolitical risk. But mind you, we then also have to look at fundamentals. You look at OPEC has upped its demand forecasts, as has the IEA. So demand is set to grow. And that given supply, that means prices are going to stay high for longer.
Is there a more direct read-through between the geopolitics of the Middle East right now, these various players kind of chiming in on who's right and who's wrong in the Israeli-Palestinian conflict, and then what OPEC Plus actually does? I mean, in theory, they should be two separate entities, but I think a lot of global investors will wonder if there is some sort of read-through.
Well, there may be some read-through in terms of, Saudi Arabia being the big gun in OPEC, and Russia being the big gun in OPEC Plus, in the plus part of OPEC Plus. And you have seen His Royal Highness Crown Prince Mohammed bin Salman come out and say, well, still, rooting for the Palestinian people. He did so to a certain degree in his big interview 2 weeks ago with Fox, where he said we may be nearing an agreement with Israel. However, let us not forget about the plight of the Palestinian people. So yes, there may be some read-through, but also a lot of it is also markets. And when you look at OPEC, they do make decisions based on analysis, and their analysis says growth may be there, but how sustainable is the growth of demand?
We've seen OPEC Plus quite enthusiastically take barrels out of the market to support the price. I'm wondering if we get an escalation on the ground even further to what we saw over the weekend and the tragedies that unfolded. If we get that kind of output, does that mean that OPEC Plus might be as willing to basically add barrels to the market to help bring down the price? What would be the red line in the sand, would you say, in terms of, helping out and doing a U-turn in OPEC Plus policy?
Well, I would say when you look at it, OPEC Plus really does look, when you see how they make decisions, they look at the demand-supply picture and make a non-biased sort of factual decision. Now, obviously, the current conflict doesn't help, and if you are the big OPEC guys who sit in GCC, it must worry you, because it's not just the Hamas-Israel conflict or how Iran ties in. It is also, how does it affect Egypt? Egypt is a near neighbor to the GCC. And if they suddenly see a flood of refugees come in, that's going to be tough on top of an anyhow stretched economy.
What does that then do in terms of factoring in the United States here? You're already seeing a little bit of military interference here coming from the United States, a lot of defense support promised, potentially from the European Union leaders as well. Is there a macro take or an investment take here when you look at kind of military involvement in a way that we really didn't see when the war in Ukraine broke out?
Well, I think it's a very different thing for the U.S. The U.S. will side with Israel, and the U.S. has always sided with Israel. And the Europeans, I mean, especially Germany, will side with Israel. And for Europe also, the Ukraine is actually a wee bit closer than Israel. But yes, we see that siding. But then on the other hand, we also see the countries in the GCC or China maybe not, or certainly not agreeing with the U.S. European stance on this conflict.
Cornelia Meyer, CEO of Meyer Resources, we thank you so much for joining us. And of course, Yusuf Gamal El-Din, our Bloomberg Middle East and Africa anchor, as well, joining the program. I want to continue the conversation here. A close ally of the Israeli prime minister says Iran may have had forward knowledge of the Hamas attacks on southern Israel. Iran, on the other hand, has denied involvement, while the U.S. says it doesn't have direct evidence on the question. Bloomberg's Middle East breaking news editor Patrick Sykes joining us now. Patrick, walk us through both sides of the case. Is there any evidence that Iran may be behind this?
So it's widely accepted that Iran is supportive, is backing, is sponsoring, funding, in part, Hamas and other groups around the region like Hezbollah. But analysts are pointing to the fact that operational decisions are often separate. So it's yet to be proven that there's a direct link with the weekend operation. We did just, in the past 20, 30 minutes, get the first public comments from Iranian Supreme Leader Ali Khamenei. He was, interestingly, warning Israel against a large-scale attack on Gaza, what he called massacres and mass killing. He said that if that were to happen, that Israel would bring a greater calamity on itself. So I think the nature and the scale of that expected Israeli operation in Gaza is going to be key in deciding how other players in the region like Iran will react.
What might the reaction be, though? I mean, Patrick, you're kind of in closer to the region than we are here in London. What is the expectation, the worst case scenario of how this all plays out?
I mean, the worst case scenario would be sort of direct conflict between Iran and Israel, I think. But history would tell us it's more likely to occur via these proxies, via groups like Hamas, groups like Hezbollah, groups like Houthis in Yemen have been active in targeting shipping in the Gulf. So the risk is that it spills beyond that. But I think the baseline expectation would be that it's an escalation of the proxy war rather than a spillover into a hot war.
It's really something we're going to be keeping our eye on. Patrick Sykes, all over that story for us. We thank you for joining the program from Istanbul. Coming up, the world's biggest crowdsourcing platform tells us why it sees the UK as a key market. We talk to the GoFundMe CEO, Tim Cadigan, live next. This is Bloomberg.
Obviously, we were trying to create shoes for me to wear in the Olympics, and that was happening pretty quickly. And then just understanding a new industry and how shoes are even made. But as we went down that path and started to just learn and research more, we learned that shoes have not been made for women. What that means is a shoe is made off of a last, which is a mold of the foot, and it's the mold of a man's foot used to make women's sneakers. And I think it took time for us to really grasp that because, you know, we've been in shoe stores and we've gone to the women's section and it's like, no, there are shoes for women. Like, what's this over here? And then to really understand, like, all of that is marketing. This is just a man's shoe, like in a different color. And so that kind of eye-opening experience was just like, okay, we got to do this. And even more than making the shoes, like, there's a deeper purpose here. Like, women deserve better and we shouldn't be an afterthought.
These CFOs are reshaping the C-suite. Bloomberg's chief future officer shines a spotlight on these dynamic leaders. On's running shoes have a unique look, and so does its leadership team. CFO Martin Hoffman is also co-CEO, and he thinks two jobs are better than one.
How do you balance those two roles?
I feel the CFO makes you a better CEO, and the CEO makes you a better CFO.
Watch Chief Future Officer this Wednesday on Bloomberg.
Conversations that matter and the insights you need. This is The Pulse. I'm Kriti Gupta in London. Now, the UK tech environment has come under strain recently, but the crowdsourcing platform GoFundMe sees it as a key market. Revenue here doubled in the last 3 years. They recently passed the £1 billion mark for donations in the UK. Joining us now, Tim Cadigan, CEO of GoFundMe. I completely butchered the name. I tried. I gave it a real shot.
It was great. It was great.
We'll do it better on the way out. Tim, thank you for joining the program. Why? Why the UK when everyone else seems to think this is not the spot?
Well, we've been in the UK for 6 years. It's one of 19 markets. And in all the markets we are in, people want to help each other. And as awareness of helping each other through crowdfunding has grown, the UK market has grown significantly. As you mentioned, we just hit a cumulative £1 billion, and that comes from 23 million people donating to help others through our platform.
I mean, people can be very nice. There's also a price on that oftentimes. And I think a lot of people have found that price in this rising interest rate environment. Given this kind of pressure that a lot of people are feeling on their wallets, have you seen any changes in consumer patterns here?
We have seen some changes. So in the last couple of years, we've seen fundraisers with a component of cost of living increase about 10 times. And those can be for families with medical expenses that might be caring for someone at home, so have heat and electricity costs, or it can be people struggling with pet bills. So we've seen a real pattern of
pet bills?
Pet bills. So vet costs have gone up, and so people are struggling to pay those, so they're asking for help to pay for their dog or cat's treatment.
So where then is your growth here? When you're talking about, especially in this environment where people are maybe pulling back a little bit on the purse strings, do you expand in the UK? Do you go abroad? What do you do?
Well, interestingly, the UK is growing as a market. Even one might think after COVID it might go down, but actually this year is probably on track to be our strongest market, and we're seeing that around the world. And so this need for people to help each other in whatever situation remains very, very strong.
So if you were to expand further beyond the UK, where would that be?
Well, currently we're in most of Europe. We're in all the English-speaking markets. So we're thinking, for example, about Latin America as a potential market that we may pursue, but we have yet to decide.
What's holding you back, out of curiosity?
We have still so much to do in our core markets to help people be more successful. And so it's a classic question of product prioritization. We have access to about 1 billion people in the markets that we already serve. And so doing a better job for them and helping more people use our platform is the top priority, and then extending beyond that.
Okay, well, I feel like you might have maybe a little more appetite to extend if you had a little bit more funding yourself. Talk to us a little bit about plans for an IPO. You're privately listed.
Yes.
You going to IPO anytime soon?
Well, actually, we are a profitable company. We have what we need to operate effectively. In terms of further options, our focus is on making our customers as successful as possible. If we keep doing that, that generates options for us as a company. We have no immediate plans beyond that.
Is that something you might consider in the long term?
I think all companies would like to consider that. I think we would consider that at the right time, but really it's a focus on the customer, helping people help each other, and becoming more successful as fundraisers and as donors. That's the focus.
All right, I'm going to try this one more time. You said about the IPO, you might be on the waiting game. What about things like debt issuance? Have you considered alternative ways to get even bigger?
We haven't needed to use any of those instruments. We run our company in a way in which we can invest what we need. So we are self-sufficient. and haven't required any other access to the capital markets or the debt markets.
A lot of sunshine and rainbows over at GoFundMe, huh? Let's talk a little bit about perhaps some of the campaigns that come in the light of the chaos we've seen in this past weekend specifically. Are you seeing an appetite just in light of the Israel-Hamas conflict to help that part of the world more? Have you detected that?
For sure. So in the event of any conflict, and this was obviously the case with the Ukraine war as well, we see a big desire to help people affected. We've navigated those for a number of conflicts and wars, and we will continue to do so. It's really important to understand that we operate within a very tight set of national and international laws that allow what kind of help can be provided and what can't, and we run the platform and monitor that very closely, particularly in a situation like this, to make sure that we and our customers are safe and compliant with those laws.
Well, it is always good to have a platform that helps, specifically in conflict like this where funding is needed so immediately. Tim Cadigan, GoFundMe CEO, joining me right here on the program. We thank you so much. Coming up, we're going to stick with the UK. We're going to discuss Keir Starmer's crucial conference speech as the UK Labour leader promises to rebuild Britain after 13 years of Conservative rule. We are live in Liverpool next. This is Bloomberg.
I've always been a person who's just been attracted to hair. I like to sit and think and theorize how I can manifest these visions that I have for braiding and how I can take something that may seem like it's a line drawing in my mind and apply that to someone's scalp.
We are the only culture that has hair that grows out of our head the way that it does. Anyone from the African diaspora is born with this amazingly curly hair that can be shaped into a variety of different ways of expression.
I want Black people to love themselves for how they naturally appear, and also to appreciate the cultural practices such as braiding that our ancestors have practiced for centuries.
Selling the Patriots, you're not selling the packaging company. I guess you don't like to sell things, right?
I really don't. We try to create a family environment in everything we're involved in. People want to be part of something that's bigger than themselves.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
I set out the fiscal rules that I would stick to with iron discipline, and I got support from the conference again in setting out those rules. We won't borrow to fund day-to-day spending. We'll bring debt down as the share of our economy, and then only subject to that, we will invest in the things that can boost our productivity, working in conjunction with business to unlock further private sector investment.
That was the UK Shadow Chancellor Rachel Reeves speaking to Bloomberg from Labour's annual conference in Liverpool. Our UK correspondent Lizzie Burden joins us now from right there at the conference as well. Lizzie, what more did we learn yesterday about how Labour would run the economy?
Well, Kriti, Labour are riding high on their 20-point national poll lead. They're sticking to the big picture, and in a sense they can, because Israel has been dominating the airwaves, and it's kind of spared Keir Starmer and his top team from getting into the details of what they would do if they were in government, and they kind of would want to be that way, given that an election could be 15 months ahead still. I was speaking to 3 shadow Treasury ministers yesterday, and none of them would tell me what month or how many months after a general election they would target having the fastest growth in the G7. This is their number one mission, and it's how they say that they'll fund public spending. I also asked the Shadow Chancellor Rachel Reeves, as you heard there, how she could be sure that the markets won't punish her for borrowing to invest when you've got yields high, when you've got debt 99% of GDP, and when we saw how the markets reacted to Liz Truss. But she channeled Margaret Thatcher and she promised caution. So despite the specifics, still, you've got it seems to be working. Rachel Reeves had her speech to the conference hall. It was absolutely packed out. You had to stand at the back if you wanted to watch her, and people were being turned away. And then you had the former Bank of England Governor Mark Carney endorsing Rachel Reeves. I should say that he is the new chair of Bloomberg LP, the parent company of Bloomberg News. But Kriti, I think what this really shows is that business is taking Labour seriously.
What else can we expect from Keir Starmer's speech specifically?
Well, he's going to be speaking later today, and this really is the key moment for Keir Starmer to tell his party and the nation why he should be Britain's next Prime Minister. We're expecting him to say that instead of this era of Conservative decline, he would bring a decade of renewal for Britain, a decade, so 2 terms. And indeed, we know that he's been telling his team to plan for 2 terms in government. You can expect him again to focus on the big picture, but perhaps we will get announcements on his house building targets. Contrast this to Rishi Sunak's approach in Manchester. Of course, he cancelled the northern leg of HS2, so you can expect him to draw that distinction, and the slogan of this conference is "Let's get Britain's future back." So that'll be the theme of Keir Starmer's speech later.
Certainly something we're going to be keeping a very close eye on. Lizzie Burden there at the UK Labour Party conference in Liverpool, keeping us apprised of everything we need to know in British politics. I want to bring us back to some headlines that we got as well. The IMF warning of stubborn inflation, weak global growth in 2024 as well. Look, this is not new. We've had the World Bank come out with similar projections. I believe they're actually bringing down the projections from about 3% to 2.9%. It's not a major move for markets, but what it is telling you is that there is that slowdown in the works. It just seems to be a long, painful, drawn-out slowdown, and that's going to be significant, especially as we're at the IMF meetings in Marrakesh, Morocco at the moment, just a couple weeks after the earthquake there as well. So talking about global development is, of course, top of the agenda, and specifically where China plays a role. We got headlines there as well earlier in the hour. They're now weighing new stimulus, now that a higher deficit could actually be meeting their growth target anyway. Now, the offshore yuan is where you saw the biggest currency move, the dollar yuan there, 728, we'll call it. And you did see a move to strengthen the offshore yuan. But again, we don't know what form this actually comes in. Is this a cut in rates? Is this a cut in loan growth? Is this a cut to actually help some of the property sector specifically? Or is this something as simple as consumer-oriented stimulus? We have no idea. And I think the operative word, as they are still thinking about it, is not official yet. We'll keep you apprised of all the headlines as we get them. For now, up next, Bloomberg Brief with Danny Berger in London, Manus Cranny in New York. Stick with us. This is Bloomberg.
MasterCard introduced PayPass, its first contactless payment system, in 2002, but the technology took some time to gain traction.
I would say we first invested in this many years ago. The adoption rate on this in the early part, even in markets like the UK, Canada, Australia, was fairly slow in the early part. The inflection point of when it really started to hit its stride was when it was used in the transit vertical. So what we figured is, let's get all the transit systems around the globe enabled for contactless technology. That will create muscle memory for the consumer who will like the experience in transit and will use it elsewhere.
How do you judge the revenue proposition for MasterCard with an innovation like that and the adoption and the pace of it?
Look, I mean, for us, we're agnostic as to whether somebody's using the chip technology or the contactless technology or, using the mag stripe, which was the old way of doing business. We earn revenues which are quite similar across both of those. The revenue potential and upside for us comes from the fact that now more spend is being done on card-based forms of payment than was being done in the past. So we're converting that cash over to electronic forms of payment, which is where the incremental revenue comes from.
If contactless payments is the current revolution sweeping the payments industry, what's the next one?
I think pay with your smile. So, biometrics.
The top names in business are on Bloomberg.
The market is starting to look over the Fed's moves into falling interest rates.
We actually think that core inflation is going to fall a little faster than the Fed expects, and that will allow them to start cutting rates by March of next year.
You get a price spiral when labor markets are tight. In manufacturing, labor markets are still very tight right now in the US.
Nobody covers business like Bloomberg. Context changes everything.
This is Bloomberg.
Good morning from our world headquarters in New York. I'm Manus Cranny.
And from our studios in London, I'm Danny Berger. Welcome to Bloomberg Brief. Let's set your agenda.
Civilian deaths escalate as the conflict in the Middle East enters its fourth day. Israeli Prime Minister Benjamin Netanyahu warns retaliation has only started as Hamas threatens to kill hostages. Treasuries roar higher in the best day since March, driven by dovish messaging from the Fed.
Higher term premiums result in higher term interest rates for the same setting of the Fed funds rate, all else equal. Thus, if term premiums rise, they could do some of the work of cooling the economy for us, leaving less need for additional monetary policy tightening to achieve the FOMC's objectives.
And China weighs a new round of stimulus to meet the growth target as Country Garden ramps up the warnings it's set for its first ever default. Two words that overcame the geopolitical angst that ravaged everybody yesterday was proceed carefully from the Fed. You've just heard Laurie Logan and, of course, Jefferson use the language, the vice chair at the Fed. Proceed carefully. So there is this building clack at the Fed, from Mary Daly to Logan to Jefferson, about the ability that the market is already doing in the bond market. Danny, you'll show those in a moment. For the stock market, the transfer is the yields rolled down by 18 basis points. They're queuing up. In moments of grave existential angst, they are piling into treasuries, piling into dollar assets. Equities are higher. Energy component of the market was up yesterday, the most in 6 months. Aerospace and defense, the biggest ramp higher since 2020. And the European market up 1.5%. Louis Vuitton will deliver their numbers later tonight. But the narrative that shifted in the past hour was the stimulus narrative from China. And that was a shotgun marriage to this kind of Rolo size at $137 billion of stimulus. Danny, good morning.
Good morning, Manus. When it comes to this bond market, here's what you were talking about. 15 basis points lower in the 10-year yields. We're lower by 10 basis points across the entirety of the curve, the best day since March. Odds of a Fed hike have halved since Friday. It's because you have a hawk like Lori Logan talking a whole lot like a dove. Westpac, though, for their part, Manus, says that it's too soon to say we're at a turning point in this Treasury market. You need economic data backing that narrative, and we do not have that yet. Elsewhere, you're completely right. It is China's stimulus that's dominating this market. What yesterday was a trade based on fear, was a trade based on war and havens, has now turned into that stimulus trade. Brent crude, it did lose steam this morning. It was heading for losses. That turned around on that Bloomberg scoop around China. We're now slightly higher, hanging on to those big gains from yesterday. The Bloomberg dollar spot, Manus, that was also gaining to start the morning. You can see that also lost momentum on the China story. Of course, the risk within all of this, and it would be so like the 2020s for this to happen, that just as the market is settling into this idea that we're at the end of the rate hike cycle, from the IMF, Manus, warning of tenacious inflation that is really going to be toying with this economy at least until 2025.
It's such a rich word, isn't it? Tenacious inflation, stubborn inflation. And they go on to talk about growth, but they also talk about the unemployment rate, and this is critically important for the Fed here. The unemployment rate they see by the end of next year in the United States at only 4%, but at 4%, but that is down from over 5.2% when they put out their projections in April. So this builds the soft landing, but I think we both concurred on Andrew Bremer at Nat Alliance yesterday when we were chatting on IB. The script has changed in terms of the propensity for hikes. So, Danny, that's where we come down. We'll debate that with our guests through the morning. But the escalation in the conflict between Israel and Hamas has entered its fourth day, with at least 1,500 deaths reported. The Israeli Prime Minister Benjamin Netanyahu says the response against Hamas has only started. That is, the Palestinian military group says its allies are ready to join the fight.
I know that we all want immediate results. It will take time, but I promise you, dear Israeli citizens, at the end of this campaign, all of our enemies will know that it was a grave mistake to attack Israel. What we will do to our enemies in the coming days will reverberate with them for generations. Our allies are ready to join the fight if Gaza is subjected to a war of annihilation. They will not sit with their hands tied. The government of Israel knows they will open the gates of hell if they try to destroy Gaza and to use non-traditional weapons to destroy Gaza, like American weapons.
We have global team coverage with our reporters from around the world. Bloomberg Middle East anchor Yusuf Gamal-Din is here covering the hostage situation. Patrick Sykes on Iran, and Bloomberg Europe correspondent Maria Tadeo on the EU leaders' response. Yusuf, let's start with you. Let's start with the situation on the ground in the hostages. What do we know so far?
Well, the violence shows no signs of abating, and the rhetoric is escalating. You heard the commentary from the spokesperson of Hamas saying they're willing to kill hostages. The operation is still very much underway, so the Israeli Defense Force is operational by land and air as well as sea around the Gaza Strip. The casualty figure at the moment at 900 Israelis, mostly civilians. Nearly 700 Palestinians have so far been killed in retaliatory strikes. I was catching up with Ryan Bowl, and he ran me through what could come next. This is going to be a block-to-block fight on the ground because the objective is to take down Hamas. And meanwhile, we heard from the Iranian leadership in the last hour as well. They continue to insist they have nothing to do with this.
And that is the big issue for us to debate. It's a potential expansion or retaliatory action, or how much does Israel blame Iran for this, but that will evolve. Yusuf, from the organizations involved in business in Israel, Chevron has also an Israeli field. What is the impact in terms of the gas prices, the gas markets?
Yeah, so this started to unfold in the last 24 hours. We saw a huge move to the upside in some of the European natural gas contracts, but that story extends into today. We're up once again to levels that we haven't seen in about 6 months. The field that Chevron operates, which is the Tamar field, is actually quite a large field in that it is around 6 wells. They produce 7.1 million to 8.5 million cubic meters a day. The plan for Israel was to become a major regional gas exporter. So the Egyptians are already raising the red flag here and saying we have a drop in imports from Israel in our energy mix. So that is going to be a real point of pressure for the Egyptians.
and, of course, for the natural gas markets globally at a time when everybody is on edge.
Yeah, we have Bob McNally in the next few minutes. Looking forward to discussing just that with him, Yusuf. Thank you so much for joining us. That's Yusuf Gamal Al-Din. Now, Patrick Sykes joins us from Istanbul. Patrick, what's the latest on the role that Iran is having on this conflict? Yusuf was just talking about it, how this escalation could really turn on that very fact.
Yeah, Yusuf mentioned the rising rhetoric there, and just in the past hour, we've had Iran's Supreme Leader Ali Khamenei repeating that denial from Iran that we had earlier in the week that they weren't involved in this operation, but also expressing support for it. And I think, interestingly, similarly to the Hamas clip we heard at the beginning, warning Israel that mass casualties, what they call mass killing, massacres in Gaza, will only prompt what he called a calamity on Israel itself. So the warnings are piling up, warnings from the US for Iran not to get involved, warnings from Hamas and Iran for Israel not to perform massacres in Gaza, and warnings from Israel that they're going to take revenge for the weekend's events.
Yeah, the rhetoric is heating up on all sides. Patrick, thank you very much. Bloomberg's Patrick Sykes in Istanbul. Let's get to our European correspondent, Maria Tadeo. She joins us now. Maria, the EU foreign leaders, they meet today. What can we expect an outcome, a statement? What do you think is on the table today?
Well, Manus, yes, they meet today in Brussels. Top of the agenda is to really establish coordination among European countries on a number of issues. And if you look at what happened yesterday, that very chaotic, almost shambolic communications coming out of the European Commission over whether or not funding to Palestine would continue, it does suggest that they seriously need to sit down and coordinate their approach. Remember, the European Commission has announced it will now put under review the money that it sends to Palestine for a number of measures, humanitarian, but also if you look at issues like development in the area, although it does say and makes it very clear that no payments have been suspended, and also states that humanitarian aid will probably be separate and will continue regardless. Beyond that, there's also, as you said at the start of the hour, the conversation around the hostage situation. Remember, the European Union has said they feared, unfortunately, that there are European citizens that were kidnapped on the Saturday morning, and they have an obligation not just to track where their citizens are, but also to try to find a way, if possible, to bring them back to safety in their respective countries.
Maria, thank you very much. That's Bloomberg's Maria Tadeo. All right, let's get to now some other top stories, rather, that are trending on the terminal this morning. And Delta, United, and American Airlines are halting flights to Tel Aviv. Multiple airlines across Europe and Asia have also suspended services to Israel. That includes Lufthansa, Air France KLM, Cathay Pacific, and Air India. The FAA is also advising airlines to expect delays and exercise caution before resuming operations. Manus.
Well, Danny, the workers at GM's Canadian plants are on strike after wage talks failed. Unifor, the union representing more than 4,000 GM employees, is trying to get the automaker to match a deal signed with Ford that includes wage increases, cost of living allowances, and pension improvements. And US police shot dead a person who crashed their car into China's consulate in San Francisco yesterday. China is calling for an investigation into the crash. The incident comes ahead of President Xi Jinping's visit to the Californian city for a key summit next month.
Now, coming up next, as I mentioned, Manus, we're going to be catching up with Bob McNally, founder and president of Rapidin Energy Group. This is Bloomberg.
That's me, Max. What's up? How are you? I have been writing about Wall Street for almost 15 years, And what that means is I write about feuds and rage and rises and falls and comebacks. And every now and then, I also write about a couple of villains. Thank you so much. And now, I am about to do something new and very, very scary. We are making a show, and it's based on Bloomberg Businessweek magazine. So what is this show about? It's a show about money, power, culture, pop business. We're gonna ask complicated and profound people about their ideas, their careers, their lives, their risks, their failures, their imagination.
It's so incredibly liberating not to care what other people think.
I was giving my tools to other communities. I wanted to bring those tools home.
Tune in. Please, really actually tune in. I desperately need an audience.
Our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. 12 p.m. on the East Coast, 9 a.m. in the West, only on Bloomberg Television, your global business authority.
This is Bloomberg Brief. I'm Manus Granny in New York, Danny Berger in London. Danny, we've got to reflect on the 2 days in the oil market, the biggest bump higher in 6 months. That was yesterday, up 4%. But the market, remains tight, and that is the view out there. The wild card is Iran and what happens to an escalation. I want to show you the 2 days relative to 7 days, because last week we gave back $10. So even though the market rallied by more than 4% yesterday, we have still not managed to undo last week's brutal slump in the market. We are, of course, joined now by Bob McNally, founder and president of Rapid Energy Group. Bob, we're looking at the oil market. We're on tender hooks. It's the first flashpoint with the dollar. We are obviously watching every twist and turn about the escalation risk towards Iran. Great interview done yesterday by the surveillance team. This was Ron Dermer, who said there's some evidence Iran knew beforehand, but the question is what happens, or how does this escalate, Bob, and what is your estimate of a retaliatory move by Israel on Iran?
Good morning, Manus and Danny. The road to an oil crisis leads through Iran. Right now, our odds are about 20%, but with risk skewed sharply higher, that this will affect oil in a material way. So we think the market is probably appropriately discounted that risk at this point. So far, Iran is saying we didn't do it. The U.S. is saying we have no evidence Iran was directly involved. And even while Ron Dermer, in your excellent interview yesterday, suggested there's some intelligence pointing to Iranian complicity, or at least foreknowledge, they haven't concluded that yet. Secondarily, you got to watch Lebanon and Hezbollah, because other than a formal accusation of Iranian complicity, it's an expansion of the conflict in Lebanon is how this thing could spread into the region and become a major oil and LNG issue. And so far, the
Bob,
fighting between
if I can just jump in here, because when you look at some of the restraint from Israel, as I believe you were going to say, some of the restraint maybe when it comes to fighting Hezbollah, some of the restraint in their language around Iran, the U.S. too, does it seem like this is a country that's very reticent to involve Iran? Do you see that as unlikely because of the rhetoric they have been using?
That's right. I think they are focused. Israel's focused on Gaza right now. They are deterring. They're mobilizing 300,000 troops. They're going to deter Iran, deter Syria. That's also the signal from the U.S. military. One war at a time. And I think all efforts are focused on now on liquidating Hamas's ability to do this again in Gaza. And they prefer not for it not to expand. The question is, as we move to the Gaza invasion phase, will Hezbollah stay out of it?
Bob, you say the market has appropriately priced the situation. I'm just going to double check prices at the moment. So you say we are we're at fair value for geopolitical risk, but what is my risk if this expands in different directions? What are the near-term touch points on the upside?
Yeah, so any sign that this was going to spread to involve Iran and therefore threaten Gulf transit routes, energy facilities, 40% of crude exports, 18% of refined product exports, Ras Laffan, liquid, the LNG, et cetera, I think we would be measuring the increments in oil in the $5 level. So we would be $10, $15, $20 higher. Were the market to, and were we to increase our odds of a disruption risk beyond the, say, 20% where we're at right now. And for that, the vectors for that would be Lebanon, formal accusation of Iran. Those are the two things to watch for higher risk premium.
Yeah, Bob, I wanted to step in here because, okay, so we've priced, at least for now, we've priced in correctly the geopolitical risk, assuming we don't get what you were just talking about. Have we correctly priced in at this moment additional Chinese stimulus? A great scoop from the Bloomberg team of at least $137 billion in additional debt. Do prices need to move higher now?
We're still in the supportive camp. We're still bullish. We were, that was a big, you just mentioned the big pullback last week before all this. We have some horrific, weird gasoline data in the United States we're trying to figure out. And the macro headwinds are high. But you know what? When we look at the balances, we still see a big deficit in this quarter, the fourth quarter, well above 1 million barrels a day. We think China is not as bad as everyone says. Demand is good. Import pull is good for crude, for SPR stock filling. We're constructive crude fundamentally. We probably would have been buying this dip anyway. On the other hand, we haven't had the big stock draws we expected to see in the third quarter so far. The U.S. gasoline is falling off a cliff, so there are some bearish flags we need to be cognizant of.
Bob, let's square it off with your political hat, your time at the White House. Is the Saudi-Israel deal in the deep freeze, or is it like binned completely? And secondly, and more importantly, does the White House now come down much harder on sanctions on Iran, and that is the supply tail risk for the oil market?
Yeah, delayed. I think the Saudi-Israeli normalization is delayed, not necessarily binned, as you said. Saudi Arabia, this is an Iran project. Hamas is an Iran proxy. Hezbollah is an Iran proxy. Now, Saudi Arabia won't be able to do deals with Israel while Israel is completing the mission in Gaza. And the Israeli government is not going to be interested in making concessions to the Palestinians. So you got to hit pause. But after this is all done, I think there'll even be a stronger rationale for Saudi Arabia to want to normalize with Israel. Biden, a lot of people, a lot of clients saying, oh, Biden's going to go tougher on Iran exports, et cetera. I don't think he's going to be in a hurry to do that. Why? Remember, part of this drug deal between Iran and the United States, which was $6 billion in ransom money for 6 hostages. The quiet deal was Iran would freeze its nuclear enrichment in return for the U.S. basically allowing Iran to export all it could to China, Syria, and Venezuela. So if President Biden cracks down on Iranian oil exports, there's a risk Iran could restart its nuclear program. I don't think he's going to be in a hurry to do that, Manus.
Bob, thank you very much for joining us this morning, setting the tone. We're at the money for geopolitical risk. Bob McNally of Rapid Energy, his views on the market. Quick check on yields as we saw a pile into U.S. Treasuries. Futures were open yesterday. A lot of their dramatic move was made then, but we are seeing yields roll down. 465 on 10-year Treasuries, a pip higher on 10-year German bonds at 278. Good morning from New York.
sports and money. They've always gone together.
But never before have sports been so massively influential and as lucrative as they are today.
NFL, NBA, none of them were what they are today when they were born.
There's leagues that are being thought of and built every day.
New teams, new leagues, new business models, even entirely new sports.
I never in a million years would have thought this is what my life would be like.
We set out to find what's happening and what's about to happen at the nexus of business, sports, and culture.
Getting involved from a business perspective was something that was very natural and an easy transition for me.
From the pickleball courts of Arizona,
to the kabaddi tournaments in India,
to the cornhole boards at your local tailgate. This is what's next in sports.
Slice through the noise.
Forget the noise, ignore the noise.
Is this just going to be noise?
Just noise.
It's noise versus signal.
Now, more to the point.
What is the lesson or the observation?
The boundaries of the entertainment world are blurry, and they're all scrambling for the same thing, screen time. And navigating this multiverse is no simple task. At Bloomberg Screen Time, it's culture, business, converged. Bloomberg Screen Time, Naya Studios, Los Angeles, October 11th and 12th. Get your tickets at bloomberglive.com/screentime.
This is Bloomberg Brief. I'm Danny Berger in London alongside Manish Cranny in New York. A Bloomberg scoop for you. China is planning a new round of stimulus to boost the economy. Sofia Orta-Costa from our Markets Today team joins us now. Sofia, we've long been waiting this bazooka of stimulus. How far does this go to getting us there?
So it's actually the first time that we really get that fiscal transfer that economists have been calling for, because so far stimulus have been focused on the monetary side of things, and now Beijing is actually finally looking to increase the deficit. It's really kind of tried to keep it below 3%, that 3% cap, because of concerns over financial risks. But now it seems that issuing more government debt, even though it's just 1 trillion yuan, which put into perspective is just under 140 billion US dollars, it's not a bazooka, but it's at least the fiscal transfer. The government finally doing its work in juicing the economy. It's not just down to the central bank cutting interest rates and adding more money into the financial system, because none of that was working, Danny. You are not really seeing a reaction in Chinese financial markets, though. I think if I can add a little bit of skepticism here, because this money will be used to fund infrastructure projects, and there's some questions over what those would be, because if it's just water conservation, which is what our colleagues are reporting, this wouldn't really move the needle on GDP.
Right. All right, Sofia, thank you very much. That is Sofia Orta-Costa from our Markets Today team. And of course, Manus, unfortunately, we ran out of time, but there's also some fresh concern around Country Garden as well.
Yeah, I mean, they're signaling, Country Garden signals default, and they've hired advisors, stock plunges. I mean, it's interesting the day they come out with this stimulus. As Sophia just said, it's not bazooka, but it is size on the day that, again, more angst in the property sector. But we can discuss all of this with
Jeff Yu. Coming up, we're going to speak to the man himself, senior market strategist at BNY Mellon. This is Bloomberg.
A cruise ship is much more than a flotilla of financials and numbers. Naftali Holt showed me around the celebrity Beyond, Royal Caribbean's newest ship, rolling out not the red carpet, instead the magic carpet, an example of investment that's yielding returns in several different ways.
Originally, actually, we designed it because we wanted to have a really nice platform for tendering, because sometimes we can't home port
So
destinations.
functional.
Exactly, value fractional. And then we looked at it and said, why don't we just make it a really cool feature spot where people can enjoy it beyond the functional space? And we created this bar. It went up and down.
Now, what does it take
How
to
about
do?
the Instagram? Can you speak about that?
I can imagine.
Instagram moment with the sunset, having a drink with your friends or family. I mean, that's amazing.
So what does it take to do something like this? And I'm thinking cost, engineering, time.
Yeah, a lot of effort from a lot of people. So it starts from just the design and the conceptual aspect of it. Then we need to figure out a lot of technical factors, the weight, the wind, and so lots and lots of hours of really hard work. And every time we up the game, we see that customer willing to spend more.
Markets countdown in Europe. From the financial centers of the world, Bloomberg Markets European Close with Guy Johnson in London and Alex Steele in New York. Real-time numbers, real-time analysis, weekdays. When U.S. jobs numbers are released, Bloomberg brings you crucial data at terminal speed and instant expert analysis. Nobody covers jobs day like Bloomberg.
Welcome back to Bloomberg Brief. I'm Manus Cranney in New York.
And I'm Danny Berger in London. Here's what you need to know. Civilian deaths escalate as the conflict in the Middle East enters its fourth day. Israeli Prime Minister Benjamin Netanyahu warns retaliation has only started as Hamas threatens to kill hostages. Treasuries roar higher in the best day since March. That was driven by dovish Fed messaging from Lori Logan and Jefferson. And China weighs a new round of stimulus to meet its growth targets as Country Garden ramps up warnings it's set for its first ever default. Manus, it is the spat of relief in this bond market, this belief that finally we are here, finally we are at the dovish pivot. Westpac, for its part, doesn't buy it, says that we need backing from economic data, and we haven't gotten that yet. The market doesn't care, though. We heard from Lori Logan, who is generally considered a hawk, saying that the market has done the work for us. 10-year yields come in by nearly 15 basis points. 465 is where we stand on the 10-year yield across the curve, lower by about 10 basis points. Brent crude and the dollar. Manus, we had talked about this just moments ago with Sofia Orta-Costa, that they'd been moving on China's stimulus prospects. It seems the market has pulled back from that, curbed its enthusiasm. Brent crude has reversed into more losses. It's down just barely, though, and we're looking at a Bloomberg dollar spot that is still slightly weaker, down 0.1% on that picture. So again, Manus, some of what was the China stimulus trade has kind of retrenched and gone back into all the excitement over this bond market.
Yeah, it's interesting. Between 9 a.m. and 10 a.m. or 4 a.m. and 5 a.m., we saw that China stimulus headline, and it boosted the equity market. Take a look at what's going on, and you have the two words that moved the risk dial yesterday, which was proceed carefully in the midst of all the geopolitical angst in regards to Israel, Hamas, and where that would go to. You are seeing stock futures higher this morning. Lori Logan, again, reaffirming the job. The market has done a great deal of our job for us. Energy markets rose the most in 6 months in the U.S. Aerospace and defense up the most since 2020. So you are just seeing that momentum rise. And just on the yield, as those yields rolled down and people ran into the dollar, somebody switched on the vacuum yesterday, which sucked money into equities, sucked money into the dollar, and sucked money into treasuries. And with that in mind, the script has changed. Those are the words of Nat Alliance. In other words, the propensity for rate hikes is very much dissipated. Tech stocks up 0.1%. This is the best day in a month for Europe, I should add, Danny. We get Louis Vuitton a little bit later on tonight, Pepsi out tonight in the US. So Europe is trying to sort of take itself higher at the moment. We're going into the depths of this earnings season. Big luxury, big focus tonight, Danny. But of course, the conversation around oil that we just had with Rapid in Energy, Bob McNally says we are at fair value for the geopolitical state of play at the moment, and he only assigns a 20% probability to a major escalation towards Iran at this juncture?
Yeah, and he talked about what we've heard so far in terms of the rhetoric coming from both Israel and from the U.S., the attacking so far really being concentrated in Gaza, all of that resulting in restraint that it doesn't seem like so far they will involve Iran. The wild card on his point, Manus, does seem to be what happens with Hezbollah, what happens to the north of Israel that threatens invoking the whole of the Levant region.
Yes, and if they come into play, then the gas and the oil markets go into not just a multi-week, but a multi-month level of convexity or let's say, concern. Danny.
Right, and that's been a huge part of what's moved this bond market, that safety trade after it closed yesterday, but also it's the dovish Fed speak. Let's talk about all of that with Jeff Yu joining us now, Senior Market Strategist at BNY Mellon. Jeff, great to see you.
Thank you.
Great to have you in the studio. Look, yesterday you have two Fed speakers, but most notably perhaps Lori Logan, who's viewed as a hawk, saying the market's done the job for us. Is this the dovish pivot? Are we there? Are we at a peak for this Treasury market?
So I think, like you could tell towards the end of last week, there was slight concern around the lines of, oh dear, if this goes on, something's going to break, right? And I think the Fed already was bearing that in mind. They were looking at that comprehensive tightening and financial conditions. You add that the risk aversion that you've seen over the last few days also onto that, and I guess they certainly are leaning in that direction. Early days, we can't believe that there's been a pivot in the space of 2 or 3 days, but I think from pricing, you can tell that the market is doing its job. Right?
Jeff, good to see you this morning. They have been wrong on transitory, wrong on pretty much everything, and they are behind the curve. That's the accusation. What goes through my mind when we ran through stocks and bonds, etc., somebody just literally ripped a lawnmower on yesterday, which was sucking money into dollars, whether it was equities, FX, or bonds. That vacuum cleaner went monstrously live for me yesterday. How did you look at yesterday's dollar action across the markets?
Well, when you have risk aversion, sometimes you really need to balance things out, right? So on the one hand, dollar is strengthening, you want to move into that. But on the other hand, especially when oil prices are involved, you're almost forced into treasuries, you're almost sucked into treasuries, to use the phrase that you used. But at the same time, you're worried that there could be upside risks to inflation expectations as well, given the move in energy prices. So it's almost a kind of a forced push, so to speak. But back to your point about being wrong, I think you'd rather be wrong to the upside when inflation's going up, rather than over-tighten and then force through a swift economic contraction and disinflation or deflation, which is pretty hard to get out of. So I think that could be the pivot that the Fed's thinking about too.
I wonder then what you make of Nomura saying this rate hiking cycle is over, but they'll do one more just for insurance purposes. Is that realistic at all that they do one just to be sure that they've got it under control?
We don't think that's necessary in the US, right? So things are under control. And even if, let's say, a third or half of the FOMC members had that in mind, like you said, like the last few days, the market seems to have done that job. So, of course, they're always going to be data dependent. You can't take anything off the table. But I think the next question is, and besides, even if there is a hike, what marginal difference is it going to make? It's about where rates are going to go for next year. How many cuts are going to be factored in? We think very limited potential at this point, but the market may want to push for a bit more.
Yeah, but the market says 3 to 4 cuts for next year, Jeff. So you push back against that. And I mean, again, Indeed. This ties into the higher for longer narrative. So what are you penciling? If the market's 3 bid at 4, what have you got?
Right, so I think if we are done right now, at least for the first half of the year, personally, I still think it's very difficult to actually squeeze any in. So that leaves scope for perhaps maybe 2 at most in the second half of the year, if not 1 more. But going back to where we are right now, in one word, labour. Labour markets, wage growth, yes, it is contained, but it's still running at, let's just say, above where the Fed finds it comfortable. And in particular, as the Bernanke paper pointed out, labour markets can actually tighten, or wage expectations can move higher exceptionally when, let's say, energy prices, supply factors are de-anchored as well. So this is still quite a pivotal moment, and they need to reinforce that higher for longer message.
Speaking on that, I mean, you talk about energy prices. We're in the middle of this unknowingness when it comes to the conflict of Israel. We're just speaking with Bob McNally, saying that he assigns about a 20% risk that Iran gets involved, that there is this kind of supply shock that comes from that. Does that sound about right for you, that the tail risk is somewhere around 20%, that this escalates?
Well, we're not assigning any firm probabilities, but clearly that's the tail risk the markets are looking at right now, and you saw that in the move in oil prices. I guess one offset factor is that the demand is not there. Yes, energy markets, oil in particular, it's often a supply-driven story. You can support prices for an extended period of time compared to other commodities, but if demand isn't there, then in terms of the volumes that are going to be in the market, then the sellers, they're going to face some headwinds as well. One new wild card, as you've just reported last hour, if Chinese demand actually starts to pick up, then we may need to adjust our probabilities as well, but it's early days, yeah.
So, Jeff, let's get to the Asian markets. We have stimulus, under $140 billion. They've tinkered with triple R. They've trifled with some other sort of small rate cuts. Here we are, traditional stimulus. Your first take, is it a decisive step? Does it change the trajectory or the narrative on growth?
Right. No, and no, because it's just far too late. Right. It should have happened probably around March, when that was the best opportunity to send a decisive signal to the market. There's going to be a plus 3.5% budget deficit for the year. They're going to support growth, and clearly, in hindsight, the economy wasn't strong enough to rebound from COVID and the lockdowns organically. Is this a down payment, though? Is this a first step? I'm less interested in the size. I'm interested in how it's going to feed through in the market and transmission. Because if the PBOC can somehow monetize this in the secondary market, right, then bringing back QE, China start on the table, there are many ways they can do this, then that could be a bit of a game changer. So it's less about the size, because, to be frank, I don't think the size is enough, right? It's smaller than the stimulus that they had in 2019, but how it's funded, how it's transmitted, that could make a far bigger difference.
Is this not a shift, though, even if it's too little, too late? Isn't this a shift in just pure ideology of the type of stimulus that China is willing to hand down?
Yes, I do think so. But on the other hand, the other shift markets were potentially looking for, maybe not in the most positive way economically, is, okay, are they just not going to be focused on the growth targets anymore? But here, I think it's a sign that they actually still, when they say there is a growth target or a growth range, they want to stick to, at least they want to hit the bottom side of that. And clearly, the trajectory, especially after the New Year holiday, the Golden Week holidays, they're looking at spending numbers probably not where they thought it would be. So a final year-end push is absolutely necessary. Yeah.
I mean, it's good to hear somebody with such utter conviction, but no, and it's not about the size, it's about the quality. So then, do I ignore this as a risk factor for me putting on more risk? Do I just go, I need more?
No, absolutely. I think it is a risk factor insofar as the downside in terms of China's economy. That is already in the price. All the risk to China and the associated APAC trades absolutely to the upside right now, especially with the new news. But again, the question is, how is it transmitted? Is this something in the short term, we get like a year-end Santa rally, or is it something more sustainable where we can get, let's just say, 4.5% to 5% growth or even higher over the next 2 to 3 years, with longer-term targets in mind? I think that is going to be the next focus, especially for long-term asset allocators. To be frank, looking at iFlow custodial data, they're not just underinvested in China, they're underinvested in EM full stop. So can this change things? Let's wait and see.
Are we allowed to talk about a Santa rally? We haven't even had Halloween yet, Jeff.
Well,
comes earlier every year, the Santa rally.
I think any rally will take right now.
Yeah, very good point. Jeff Yu, thank you so much for joining us of BNY Mellon. Now, coming up, the U.S. says security assistance for Israel is on the way. We're going to discuss that next on Bloomberg.
Names in business are on Bloomberg.
I see a world where financial conditions have gotten tighter, and the transition mechanism, which the Fed would like to see in slowing down the economy, which we all expected, it's taken a lot longer. So the real impact of higher costs around the globe in the US and Western Europe, it's not been felt yet. And so when people say, well, we're going to have a soft landing, I'm skeptical.
Nobody covers business like Bloomberg. Context changes everything.
Obviously, we were trying to create shoes for me to wear in the Olympics, and that was happening pretty quickly. And then just understanding a new industry and how shoes are even made. But as we went down that path and started to just learn and research more, we learned that shoes have not been made for women. What that means is a shoe is made off of a last, which is a mold of the foot, and it's the mold of a man's foot used to make women's sneakers. And I think it took time for us to really grasp that, because, you know, we've been in shoe stores and we've gone to the women's section and it's like, no, there are shoes for women. Like, what's this over here? And then to really understand, like, all of that is marketing. This is just a man's shoe, like in a different color. And so that kind of eye-opening experience was just like, okay, we got to do this. And even more than making the shoes, like, there's a deeper purpose here. Like, women deserve better and we shouldn't be an afterthought.
This is Daybreak Europe. I'm Kriti Gupta. Let's get to the stories that set your agenda.
Taking you from the U.S. market's close.
A lot of this was priced into the U.S. session.
To the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in every weekday at 6 a.m. London time, only on Bloomberg Television.
I also made a request, direct request to President Xi, that the foreign ministry strengthen their statement on the Middle East, which didn't even mention the loss of the horrible, gut-wrenching loss of civilian life. I'm gratified the foreign ministry issued a new statement that did condemn the loss of civilian life.
That was Senate Majority Leader Chuck Schumer on his meeting with President Xi. Joining us now to discuss is Bloomberg senior editor Bill Ferries. Bill, we've had the U.S. with saying that aid is on the way for Israel. So we have this short-term measure, but what sort of pressure is this White House facing to do something longer term to sustain aid?
Well, apparently, you're right. There is some military aid on the way. The president has the authority to dispatch that aid. But in terms of a bigger package and something that might be longer term, that will take congressional approval. What some members of Congress have proposed to the White House that they consider is combining military aid for Israel with military aid for Ukraine. That would help many in both the Republican and Democratic Party who want to continue supporting Ukraine, while also while providing the aid that almost everyone in the U.S. Congress would like to provide to Israel. It kind of gets over that hurdle of a small group of mostly Republicans who are increasingly opposed to the Ukraine aid. The White House so far, according to our reporting, doesn't think that that kind of a measure is necessary at the moment. But as we'll see as the politics play out in the coming days and coming weeks, especially with the House still in its leadership fight, that might be something the White House has to take up more seriously.
Well, let's just talk about that 4%, because this was part of McCarthy's narrative yesterday. He stressed that he had the support of 96% of the House Republicans, and it was wrong that 4% of the GOP worked with Democrats to remove him. McCarthy, back in play, potentially, for speakership. How real is that risk?
Well, it does suggest that maybe Republicans are not unifying around any candidate. The fact that the McCarthy is still kind of out there and front and center and weighing in on this. He looked like the speaker today talking about how weak the U.S., he says, would have looked if we were in the middle of a government shutdown while watching this war take place over in Israel. So, you know, the Republicans are due to meet, I think, later today. They're due to have some kind of a vote on Wednesday. But they have to really be unified if they're going to go to the floor of the House and say, this is our candidate. We remember what happened to McCarthy. It took 15 rounds for him to finally get the vote to become Speaker, and that was only after some of his members voted present. So there's probably still quite a fight ahead in terms of who's going to lead the House.
The dynamic, though, has changed, Bill, given what we've seen unfolding over the weekend, and again, the pressure to have support for Israel. Does that make it more likely that Republican lawmakers can coalesce around a candidate?
I think it does amp the pressure on all sides in this. I don't know if it amps it up to the point where one side decides to, pull up the white flag and surrender and say, that's all right, we'll go with your guy instead. That's not something, compromise is not something that we have seen, particularly the far-right fringe of the Republican Party in the House, be able to do. So that's going to be a heavy ask, and I think the pressure will need to be higher before you see something like that happen.
The pressure for assistance, Bill, just to square this off, just to give some figures, the U.S. has given $44 billion to Ukraine. It gives $3 billion every year to Israel. Do you think this is one of those moments when there is a clarion call for America really to show its global position and step forward with a unified funding for those nations that are in the U.S.'s interest?
I think you're going to see very kind of foreign policy focused Republicans and Democrats making that kind of an argument. But I think you'll also see the opposite. We saw Senator Josh Hawley today say whatever aid we still have approved and haven't sent to Ukraine needs to be immediately diverted to Israel. So I think there's going to be a counter argument to that narrative.
Okay.
Bill, thank you very much for that. That is Bill Ferries. And tune into our interview with National Security Council spokesman John Kirby. That's at 8:30 a.m. Eastern. Now, coming up, we're going to look at some of the market-moving events to watch throughout the day. But let me leave you with a check on this market as U.S. futures continue to move higher, up 0.1%. Dollar moves lower as U.S. 10-year yields continue to fall 13 basis points. TD Trading says the floor for the 10-year yield is at 4.5%, so we do not have much longer to go from here. New York crude down 0.25%. This is Bloomberg.
The younger generations are more, of course, pay more attention to sustainability, and so they are looking at brands that are greener. But you have to make sure you're authentic because they hate greenwashing. But what is very important to remember is that none of them, whether they're young or not, will ever sacrifice product quality and efficacy to sustainability, which is why part of the big transformation of our R&I, where there's this €1 billion we spend every year, most of it is spent on transforming our formulas from petrochemicals to biosourced ingredients and green sciences, but without losing the efficacy.
CFOs are reshaping the C-suite. Bloomberg's chief future officer shines a spotlight on these dynamic leaders. On's running shoes have a unique look, and so does its leadership team. CFO Martin Hoffman is also co-CEO, and he thinks two jobs are better than one.
How do you balance those two roles?
I feel the CFO makes you a better CEO, and the CEO makes you a better CFO.
Watch Chief Future Officer this Wednesday on Bloomberg.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
This is Bloomberg Brief. I'm Danny Berger in London alongside Manish Krani in New York. Now let's get you set up for your trading day with a quick look at what's ahead for the next 24 hours. We're going to have Fed Speak continuing. Raphael Bostic, Christopher Waller, Neil Kashkari, and Mary Daly due to speak at separate events. And Treasury Secretary Janet Yellen will also deliver remarks in Morocco later today. Caroline Ellison, the star witness against FTX co-founder Sam Bankman-Fried, is due to take the stand at the fraud trial as soon as today. Her highly anticipated testimony will be pivotal in the case. And Birkenstock is set to make a final decision on pricing its IPO later today ahead of its trading debut on the New York Stock Exchange tomorrow. So, Manis, that's what's happening in the wider space. Of course, we've got some pretty big earnings that are going to hit the tape today, too.
We have indeed. Louis Vuitton is going to hit in Europe. Europe having one of its best days that we've seen for a number of weeks. But Louis Vuitton, of course, the consumption of champagne, they told us, they warned last week that nightclub demand is doing well, but at-home consumption is down. And within that, there is a general sense of revenge pleasure of 2021 and 2022. Maybe we're running just short of that. But fashion and leather is expected to come in at 10.3 billion. Let's see what they say about China, because that's going to be critically important. And then, of course, Bloomberg Intelligence have run the numbers. Whatever Louis Vuitton does and Kering does, that's got a huge impact for, guess what, Danny? Ferrari. I've only been close to a Ferrari. I've actually been driven around in a Ferrari by one of my banker friends as opposed to owning one. Danny, good morning.
Manis, you can't drive a Ferrari in New York.
That was actually 30 years ago. That dude had a Ferrari 30 years ago. That just shows you what he was earning then. Go figure.
Huh. Okay. Yeah. Why not? I mean, a good friend to have. You should probably keep him around. Manis, we're also going to be getting PepsiCo's volume, sales, and consumption trends are going to be looked for very closely. All right, should we make a bet? What are the chances they mention Ozempic? I'm going to say 100% odds they mention it.
It's sort of like it's like a caveat. It gets everybody out of jail, doesn't it? In terms of, you know, we're having a tough time. Maybe they'll actually have to cut prices. I mean, here's a radical thought. Ozempic causes demand destruction, which ultimately forces them to cut prices, which reduces inflation, which stymies the Fed. There you go. Just extrapolation on the fly.
Wow.
Wow.
Can you imagine that? Inflation is brought down thanks to Ozempic. It's not just curing the world of diabetes, it's also curing the world
I am very tongue-in-cheek.
Inflation, too.
I am tongue-in-cheek, because we both know that the Fed focus on core inflation. Core.
Yeah. And I'm also focused on my core, too, just as it relates to Pepsi and all things unhealthy. But, Manis, I did just want to mention, you know, these consumer stocks had their worst week last week because you had Walmart warning about Ozempic, because you had the CEO of the company that owns Pringles also warning about Ozempic. This is something that has led to value destruction in these stocks.
No, look, absolutely. And on a slightly more serious note, it will have an impact. We are going through some societal changes in terms of the use of these drugs, the expansion of these drugs, but the pricing of those drugs is critically important. Should we close off with a bit of FX? Because I think we didn't actually get there. Have a look at dollar yen. I mean, and this is I think the fly in the ointment. The Bank of Japan is considering lifting its full year 2023 forecast to 3% from 2.5%. Now that, Danny, can have implications for YCC. By the way, that was from Kyoto at the Bank of Japan.
Yeah, and look, it's a debate we've been having long. Does the Bank of Japan move this month? Does it move later? Either way, that's going to have huge implications for this Treasury market if we get that vacuum of investors bringing money back home into this Japanese market.
Okay, well, that's it for Bloomberg Brief. Surveillance is ahead with the team. They've got the National Security Council spokesman John Kirby joining them at 8:30 a.m. Eastern, right here on Bloomberg. From London and New York, good morning.
venture capital. It's been volatile. From bank crisis anxiety to AI exuberance, Caroline Hyde and Ed Ludlow chat with the biggest names about the latest tech trends.
Is AI going to dominate the earnings narrative for this sector this week?
I think we're seeing opportunity and potential platform shift that we haven't seen in a long time.
If you're a company today and you're not embracing the changes that are taking place with AI, you're going to be behind.
How do you prove to the investor base that you haven't just tacked on AI to make yourself sexy?
It's very hard to differentiate if you're not experienced with AI.
The startup stories.
We think this is a watershed moment for technology.
Certain categories are more exciting than others. Right now, obviously, generative AI is a category that is very exciting to startup founders, customers, and venture capitalists as well.
So what we are seeing is a new area of opportunities for new founders to come and change the industries that matter.
And the real talk on realistic valuations.
Some of the best opportunities are sitting right in front of us.
How do you discern which ones are good on the marketplace right now?
I think founders have woken up to the reality that taking on more money at higher terms doesn't necessarily play to their benefit in the long run.
How do you actually invest?
Follow the VC money on Bloomberg Technology, the only daily business show dedicated to tech right in the middle of the trading action. 12 p.m. on the East Coast, 9 a.m. in the West, only on Bloomberg Television. Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything.
This is Bloomberg. We are really, I think, on the verge of a larger geopolitical regional conflict.
What happens next? And does this spread? Does it become a wider regional conflict? And that has all kinds of implications.
The extent to which this broadens out into kind of other regions is kind of critical.
Psychologically, there certainly has been a bit of a pullback.
The buyers right now are waiting on the sidelines saying, why would we catch this particular night?
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Live from New York City this morning. Good morning for our audience worldwide. This is Bloomberg Surveillance on TV and radio alongside Tom Keene and Lisa Abramowitz. I'm Jonathan Farrow. Your bond market reopened stateside and reopens with a powerful rally on a 10-year yield down 13 basis points. TK, your 10-year, 466.
We have to wait and see how it settles out. I mean, we come off of what we saw last night with certainly a flight to quality as a general statement, although I don't see that in the Swiss franc. But I think we've got to let it play out. The news flow from Israel is just minute by minute, literally, at this point.
This is a treasury market, of course, Tom, that missed out on the haven flows yesterday. Lisa, you have to also throw in the Fed speak we've had over the last week, which really started with your interview with the San Francisco Fed President, Mary Daly. Throw in Jefferson, throw in Logan. They're comfortable letting this bond market do the work for them. And then what happens? The rally starts.
Which I wonder if that's going to lead to them actually coming back and maybe reversing some of their stance, sort of this chicken and egg kind of question. But I take your point. Is this less of a haven trade type of bid and more of a just simple response to Fed officials that are signaling that maybe they're done? And I think that that really is maybe the confusing tea leaves we need to parse through, more than just saying simply, this is a haven bid showing that Treasury was once again are the place to go if you're worried about just global security.
I think it's a data-dependent bid. They're going to wait to see what PPI is, which used to not matter, and I'll take the point. PPI matters here. And then what's CPI? Wednesday? Thursday? I can't remember.
Thursday.
But the answer is CPI is front and center, maybe more important than the bang-up jobs report we have.
That's the bond market taken care of. Allow me to bring you the update on Israel. The latest from Prime Minister Benjamin Netanyahu, saying the retaliation has only started. Yesterday, we'd learned that Israel announced its largest ever mobilization, more than 300,000 army reservists. Tom, our latest understanding of things and how it's developing, Israeli military is building a base next to the Gaza Strip to accommodate thousands of soldiers and prepare for what could be the next phase of retaliation.
We're going to focus on this here first, and it is thousands of soldiers, which is it's a mobilization of Israel. I would suggest there is no American equivalent. We have to always put scope and scale in order. And if it's a round number 300,000, that adds millions of people that would be equivalently caught up in America.
Looking forward to catching up with John Kirby from the administration a little bit later on this program this morning. Just to bring you a snapshot of the price action currently on the S&P 500, we are a little bit firmer yesterday as well, potentially a third day of gains on the S&P by 0.2%. There's the move in the bond market. Big rally, yields lower by 13 basis points. And in foreign exchange, that means you have a weaker dollar. The euro very close to 106, Lisa, 105.99.
And one of the key distinctions this morning is going to be parsing through whether this is a haven type of bid or whether this is in direct response to Fed speakers today. We get a slew of additional speakers, including Atlanta Fed President Raphael Bostic, Fed Governor Chris Waller, Minneapolis Fed President Neil Kashkari, and San Francisco Fed President Mary Daly. If they double down, it's true, we are hearing repeat speakers, if they double down on this message that the bond market is doing the work for them, even as the bond market starts to move in the other way, that could turbocharge some of the moves. 10:15 a.m. we hear from U.S. Treasury Secretary Janet Yellen. She is speaking at Marrakesh at the IMF annual meeting. Curious to see the tone on sort of uniting different geopolitical factions at a time of increasing splintering, especially as the conflagration in the Middle East does potentially expand. And today at 1 p.m., President Biden is giving remarks on the attacks in Israel. Very curious to hear how he dovetails the U.S.'s ability to respond as House Republicans continue to debate who is going to be their speaker.
Lisa, thank you. Your latest update, the war between Israel and Hamas in its fourth day with at least 1,500 dead. The Israeli military responding with strikes in Gaza overnight. Hamas threatening to kill hostages if civilians in Gaza are killed in strikes without warning. President Joe Biden confirming at least 11 U.S. citizens have died in the conflict. As Lisa mentioned, Biden set to speak at 1 p.m. Eastern Time. Bloomberg's Israel Bureau Chief Ethan Broner joins us now from Tel Aviv. Ethan, wonderful to finally catch up with you, sir. Can you just give us the current state of play, where things stand right now?
Well, you've all expressed it pretty well. Where there are 300,000 guys in uniform waiting on the border, they have set up this base. They are a little stretched for equipment, they say. The U.S. is filling it in. But it does feel like we are but days away from a major land invasion. It's impossible to imagine them trying to carry out what they claim they want to do, which is to end Hamas's ability ever to do what they did on Saturday again without such a sort of house-to-house kind of invasion. So I think that, you know, markets, certainly everything is going to start going relatively crazy once that happens. And then there's the other factor, which is might Hezbollah in Lebanon join in? There was a warning from Iran today that Israel needs to not do what it's doing in Gaza.
Ethan, you are exceptionally experienced with this. Your work at the New York Times on Al-Qaeda 20-some years ago. I'm fascinated how you perceive Israel's perception of Hamas as a terror group. Is it a specific group? Is it an entity? Or is it a band of thugs? What's the character that Israel perceives Hamas?
This is a fascinating question, and the reason it's so interesting is that Israel's view of Hamas shifted dramatically 3 days ago or on Saturday. Before then, there was this, originally it was seen as a group of thugs. Then for 16 years, they have been ruling in Gaza, and they have actually been negotiating with Israel. There have been 18,000 Gazans who've been working in Israel. That requires negotiation and interaction with the Israeli officials and letting in all kinds of stuff. So there was a sense that actually it was becoming a more responsible, normal kind of ruling organization. Meanwhile, this just happened, and it is now viewed as a group of ISIS-like, worse than thugs. The words that's used here are hardly worth repeating, but animals and so forth, because there really was just an open slaughter of women, children, and the innocents on Saturday in a way that is a little hard to understand.
Ethan, it was a massacre. There's no other word to describe it. Ethan, thank you, sir. Ethan Broner, thank you very much. We'll catch up with Ethan through the week. The View from the White House with John Kirby of the National Security Council at 8:45 Eastern Time. We'll catch up with him a little bit later on this morning. With us around the table, Tony Zwar, Chief Market Strategist at Canaccord Genuity. Tony, good morning.
Good morning, John.
You weren't exactly bullish before. Is this another reason to be cautious now?
So last week we talked about an environment ripe for an oversold rally, and this kind of all plays into it, where you got our weekly stochastic got to the lowest level it was since the low in last October, And then before that, the Christmas Eve massacre in 2018. So you got a lot of the average stocks already smoked. When you get that oversold, it's an environment ripe for a tactical bounce, but I think it's just a tactical bounce until you really get a significant sustainable improvement in all areas of credit. And that can only come from a major Fed tone change.
How much has have the events over the weekend changed or altered your framework for how you view things going forward in terms of your stock selection, in terms of your allocations, just simply because of the potential for oil prices to go higher, of growth to be impeded, of borrowing to increase to fund some of the conflict?
You know, there's no way I could follow up the prior guest or speaker. I mean, it's a horrific thing that's over there. I don't know how to put it in there, Lisa, because it's a guess. Like, this is all guessing anyway. The Fed says they're data dependent. The data's a guess. So this whole weekend thing and its impact on oil, if you told me that that was going to happen on Friday morning and oil was going to go up 4%, I would have put the futures down. But that's not what happened. The market rallied.
Well, there's a question on the borrowing front, right? Is the financing of some of these things we're hearing overnight, for example, in China, all of a sudden open to more deficit financing to support the economy. As some of the geopolitical pressures start to really heat up in a more significant way, does that increase the pressure on different governments to increase their borrowing regardless of concerns about deficits?
They're going to increase their borrowing regardless, because let's talk about exactly when the S&P 500 peaked this year. It was on July 31st. It was the day that Janet Yellen said that she's increasing the Treasury issuance by a third more than the market expected to $1 trillion for the quarter in the post-debt ceiling problem. That came at a time where the Fed is quantitative tightening. There goes your big buyer. China and Japan are defending their currencies. There's your next buyer. And then banks are under pressure on their balance sheet to expand their balance sheets because of the Silicon Valley Bank issue and the regulatory environment. So you got this incredible increase in supply, and at the same time, you lost your three biggest buyers. So I don't believe that the rise in rates is purely fundamental. As a matter of fact, it's you know, you guys know, I've been talking about how a soft landing is likely the worst case scenario because it keeps the Fed higher for longer. Guys, it's a generationally levered system. Higher for longer isn't good. It means you can roll over the debt. So economically, I'm negative enough that I'm actually starting to think bullish, because you get three stages of a decline in economic weakness. You get good news is bad news, because it means Fed's going to tighten. We got that. That was last year. Then you get bad news is good news. Okay, the Fed's going to be done. We're kind of in the midst of that chopping around over the course of the last few months. And then you get bad news is bad news. It's when you actually get into that recession trade. Well, and when that's happened, that's when you want to attack.
Okay, we call that catharsis medically.
Yeah, that's right.
You're saying that just flat out to reinvigorate the Dwyer bull market, we need a catharsis out. Where's that equivalent on VIX?
Well, let's forget about. It can happen from an event, but it's got to happen from a tone change at the Fed. Everybody looks to 1995 and the magic, mystical soft landing. That wasn't magic. You got a 200 basis point drop in corporate rates, mortgage rates, and Treasury rates. Fed only cut 3 times, the last one on January 96. So it's not like the Fed was going down 75 basis points at a clip. But it was the Treasury market dropping that dropped the mortgage market, that stimulated the bond market. You had to have an improved outlook for money. So for me, it's not this great academic study, it's common sense. What makes the Keene household, with all his kids and camps, get out there and spend? He's got to have access to more money.
Tony, that's not the right question. It's what stops them. What stops the Keene household from spending?
Nothing. Literally nothing. Even private credit's going to take over the limit he might have on a bank.
I've got private equity coming in. I'm talking to Apollo about.
They're trying to lever you up.
Leverage buyout.
Tony, let's wrap things up. What's the common sense call on the banks going into Friday?
They're down so much, I think the common sense call is don't make a guess. I don't think it's going to be great, John. Bank lending standards are tightening. NFIB just came out a little while ago. Small businesses aren't optimistic. The business side of it isn't great, but they've already been smoked. So what are you going to short them now? So I think it's just to kind of get out of the way, wait for credit to improve. As I said, that's the bad news is when you want to go attack banks, you want to attack consumer, you want to attack those early cycle names.
Do you get the sense that high yields are hurting them, not helping them? Hasn't that been the surprising story of the year so far?
It is, but high yields help them. high spiking yields don't. And I think that's what we're really missing here is, okay, let's say the bond market's rallying, that's terrific. It's helping the futures. I'm on a trade call anyway. I think it's going to bounce. It's still oversold. Here's the problem. You could go down 50 basis points and be where you were when it was already a problem a little while ago. So it really is like in 95, 1966, 2019, 2016. What generated the economic recovery was a significant sustainable drop in treasury, mortgage, and corporate rates. That's what you got to see.
Tony, thank you, sir, for dropping by the studio. Tony Dwyer there of Canaccord Genuity. Big rally in the bond market this morning. Yields lower by something like 13 basis points. Tom, your 10-year in and around 467 right now.
2-cent spread comes back. It steepens out a little. I'm going to call that noise. The real yield, John, at 2.35% is again in 13 basis points. Let's call it a flight to quality adjustment. John, you mentioned the banks. Before the show, we were talking Bank of America and some of the concern people have about their interior dynamics. Maybe we'll get clarity. They are down 5.3 standard deviations from the peak. If you go back to 2022, you enjoyed it, John, at $50 a share. It's been halved and is trading really at lows back to 07.
They've had a really, really tough year.
I didn't realize that.
Looking ahead to earnings, we'll get earnings from Bank of America next week. JP Morgan coming up on Friday. Stuart Kaiser of Citi in the next hour on the markets. Coming up next on this program this hour, Stephen Cook, the Senior Fellow for the Middle East at the Council on Foreign Relations. That's next from New York. Good morning.
The top names in business are on Bloomberg.
The market is starting to look over the Fed's moves into falling interest rates.
We actually think that core inflation is going to fall a little faster than the Fed expects, and that will allow them to start cutting rates by March of next year.
You get a price spiral when labor markets are tight. In manufacturing, labor markets are still very tight right now in the US.
Nobody covers business like Bloomberg. Context changes everything. The top names in global leadership are on Bloomberg.
The conflict between the U.S. and China has escalated so much. This is one of my greatest fears, that the small nation is forced to suicide.
Bloomberg. Context changes everything.
We're going to exact such a high price that not only will Hamas never consider doing this again, I think none of Israel's enemies are going to ever think about doing something like this again. Iran is the biggest enemy of all, and they're pulling the strings behind the scenes, giving money, giving weapons, having meetings to try to coordinate attacks in Israel. And as I speak to you, Iran is trying to push other people into the theater of war.
Was Ron Dermer, the Israel Minister of Strategic Affairs. Fantastic conversation with him yesterday. Big question, I think, for all of us worldwide, whether Iran will be implicated, Tom, directly. He talked about what his working assumption was and how that working assumption had changed over the last few days.
It was a fabulous conversation, and John, let's review that because it was buried in the middle of a heated back and forth between you and the ambassador. And this is the basic idea where it's not that he let slip out, but he made very clear that they are studying the immediacy of Iran within all of this day by day and into day 4 of this war.
It sounded like they were looking at incoming intelligence, Lisa, and trying to figure out whether there is anything to be seen here conclusively about Iran's direct involvement in the events over the weekend.
He said something very interesting in response to one of your questions, saying that initially it did not seem as though Iran was directly involved in planning this attack. Different information has made them look more closely. So this seems like, to your point, this is an ongoing discussion and investigation, not something that's conclusive as of yet.
We'll turn back to that in just a moment. I want to turn back to the price action in the equity market on the S&P 500. A lift yesterday, a lift again today on the S&P up by 0.2%. Here's your rally in the bond market. Yields lower by something like 13 basis points. Tom on a 10-year, 467. What are the best days since spring in the Treasury market as we reopen?
Well,
missed out on the Haven bid yesterday. It's back today.
Yeah, both you and Lisa mentioned that. I'd say it's come back in, but it's certainly not back to center tendency. There was such a run to a higher yield, John. Technically speaking, in no way can you construct this as a reversal. We had a huge multi-standard deviation run higher in yield, and we've only come back so far.
Not just the Haven story, though. We have to start with Lisa's conversation with Mary Daly of the San Francisco Fed at the Economic Club in New York at the back end of last week, Tom. Just raising the idea, I think a strong suggestion that they're happy to let the bond market do the work for them. Heard that from Jefferson yesterday to some extent.
Right.
Heard it from Logan of Dallas as well, to a greater extent too.
You got the Goldman Sachs series, but also the Bloomberg Financial Conditions Index shows that restriction. No question about that. Right now, and this is a great honor, Stephen A. Cook is Senior Fellow of Middle East and Africa Studies at the Council on Foreign Relations. It's unfortunate that he and I speak only when the world is blowing up, or his world is blowing up. The definitive book on Turkey is False Dawn, and this June we will celebrate the end of ambition, how America should move forward in the Middle East. Stephen, thank you so much for joining us today. I want to go to the ambition of the president this morning. He's going to speak here. We have to recalibrate an ambition with all the legacy of 48, 67, 73. What should be America's ambition day 4 of this war?
Well, it's clear that the president is going to throw all of his support to Israel. Already, there is actually bipartisan support for anything that the Israelis need. Resupply, they will need a resupply of Iron Dome interceptors. And there is an aircraft carrier battle group moving into the Eastern Mediterranean. That is clearly a warning to Iran and Hezbollah not to widen this conflict. That would be the nightmare scenario for the Israelis. So the United States is getting indirectly or directly involved, and I think it's an appropriate policy for the United States. The question will be, is as this conflict goes on, the Israelis are clearly gearing up for a major ground invasion, infantry in the Gaza Strip, occupation of the Gaza Strip for periods of time. How long will the international community remain staunchly behind Israel's operation? I think the Israelis have a lot of leeway with this president in particular, and after how many Israelis were killed in the opening stages of this conflict. But one can imagine, given the past pattern of events, as the Israelis prosecute their operations and more innocent Palestinians are killed, that there will be pressure for the Israelis to move off.
Stephen, to borrow from Mahad Abedin, is this an Iran resurgent? I mean, I look at Iran and I say, this is a complete surprise for so many of Hamas, but maybe also a complete surprise of Iran. Is it Iran resurgent?
Well, certainly Iran is playing the role of an agent of chaos in the region. I think the administration's efforts to modify Iranian behavior through diplomacy, through incentives, just does not work. And I think it should be clear to everybody by now that trying to engage the Iranians, trying to get goodwill through goodwill, is not a fruitful avenue to pursue. The Iranians are not willing to reciprocate. They want to push the United States out of the region, and they want to confront Israel. And this is the result of it. And the sooner we all come to that conclusion, the better off we'll all be. We'll be clearer policies towards Iran will come into view.
Stephen, it feels like there is a feeling that Iran was involved. Yesterday, Jean was talking with Ron Dermer about this, about how as they get more information, they are realizing that maybe there was a more direct role from Iran. Is there just simply a reluctance to say it out loud? Because then it would necessitate a response that does escalate the conflict to such a degree that it puts it in dangerous territory?
I think that's exactly right. I think all the publicly available indicators would suggest that the Iranians were involved. The meetings between the Quds Force commander last spring and Hamas, Islamic Jihad, and Hezbollah, the kind of quantum leap in terms of tactics and complexity of the operation that began on Saturday has all the hallmarks of actually Hezbollah, Iran's primary proxy throughout the region. The unusual activity of the supreme leader on social media last week talking about the Zionist entity dying. And then, of course, Hamas itself thanking the Islamic Republic for its weaponry and support for the operation. If, though, the Israelis publicly pin the Iranians, it does call for direct engagement, kinetic action against the Iranians. Now, of course, the Israelis and the Iranians are engaged in a shadow war throughout the region anyway, but this would be a step up and a real confrontation, and one has to be sure that the United States and Israel are engaged in conversations about the what if here.
In your recent article, Stephen, in CFR, you wrote that under these circumstances, no foreign government, including the U.S., will have any leverage on Israel to respond with restraint. Where is the rest of the Middle East on this? We've heard about the United Arab Emirates. We've heard about Egypt. We've heard about Qatar trying to negotiate some sort of deal to release the hostages. Seems like that's a no-go based on both sides and some of the rhetoric there. What are people doing to try to prevent a full-out Middle East war that does involve a great deal of nations?
Well, there's not a lot that they can do. I think this is one of the problems is that publicly, Arab governments have to issue these kind of statements that are run from ambiguous to condemnation of Israeli conduct. Now, Israelis, of course, have a lot to answer for their conduct in the West Bank and the Gaza Strip over many years. But of course, that's obviously no excuse for the butchery of innocents. So, in behind the scenes, they are seeking de-escalation, but of course, many of them remain on Israel's side here. So, again, they will, the Israelis will have a certain amount of leeway in order to prosecute this campaign. But of course, as the civilians suffer, there will in time be lots of pressure for the Israelis to back off. I think the Israeli public is demanding the destruction of Hamas, and that's going to give the Israelis further ability to resist international pressure that will come from both its neighbors as well as Europe and some quarters in the United States as this operation continues.
Stephen, thank you for your insight this morning. Appreciate it. Stephen Cook there of the Council on Foreign Relations. Council of Foreign Relations did a fantastic press briefing, Tom, over the weekend. Must watch for a lot of people who might have missed it. Just go onto the website. Just brilliant.
Well, I'm biased here as a member in what Richard Haas rebuilt there and advanced forward to Michael Froman and what they're doing now. But it's a set of smart people who work from an operative foundation of humility. You don't have many people wandering around going, hey, I've got this parchment, I'm smarter than you. That's really not part of it.
Brilliant lineup this morning on Bloomberg Surveillance. Coming up at 8:45 Eastern Time. John Kirby, the U.S. National Security Council Director. Look out for that conversation a little bit later on this morning. Just to turn to the price action in the equity market on the S&P 500. Still firmer. Higher on Friday, higher yesterday, higher this morning. Just a touch. Big rally in the bond market as the Treasury market reopens. Missed out on the haven flows yesterday. Receives it this morning. Yields lower by 13 basis points, 467. And some dovish Fed speak, if you want to call it that, in the mix too. We'll talk about that as well. From New York, this is Bloomberg.
That's me, Max. What's up? I have been writing about Wall Street for almost 15 years. And what that means is I write about feuds and rage and rises and falls and comebacks. And every now and then, I also write about a couple of villains. Thank you so much. And now, I am about to do something new and very, very scary. We are making a show, and it's based on Bloomberg Businessweek magazine. So what is this show about? It's a show about money, power, culture, pop business. We're gonna ask complicated and profound people about their ideas, their careers, their lives, their risks, their failures, their imagination.
It's so incredibly liberating not to care what other people think.
I was giving my tools to other communities. I wanted to bring those tools home.
Tune in. Please, really actually tune in. I desperately need an audience.
From the world of politics to the world of business. Every weekday at 5 p.m. Eastern Time, hosts Anne-Marie Hordern and Joe Matthew alongside Kaylee Lines deliver news, insight, and analysis live from Bloomberg's Washington headquarters. Get the latest from and about politics' biggest power players at the end of every trading day. Balance of Power, every weekday at 5 p.m. Eastern Time, only on Bloomberg. Context changes everything.
Attempting to build on the biggest two-day rally on the S&P 500 since August. Here's the price action for you right now. We're firmer by 0.2% on the S&P, up by 0.3 on the Nasdaq. A lift on a Russell, the small caps as well. That rally continues, up by 0.4%. Here's the monster rally in the Treasury market. 2-year, 10-year, 30-year, 2-year south of 5%, down 8 or 9 basis points to 4.99. 10-year off by 13 basis points at 466.95. Quite a rally, Lisa.
Honestly, this to me just highlights not just the Haven bid, but also what we've been seeing with respect to some of the commentary from Fed officials. The thing is that at what point does this kind of move encourage them to go further, right? I mean, it basically is this, self-fulfilling cycle that leaves us in this loop with watching Fed officials and the Fed officials watching the bond market.
It's a major issue, TK. You say we're comfortable allowing the bond market to do the work for us, then the bond market starts to go the other way.
Yeah, well, that's the perversity of the markets. It's always fun and games. But, John, I'm going to bring that insight of yours right over to the equity markets. And, with the news flow that's going on, including a war, how do we make light of earnings season? And I'm going to take the perversity of the bond market and bring it over to OMG, Pepsi raises profit forecast as sales earnings beat estimates. That's terrible. That's good news is bad news, or bad news is good news?
Are we drinking less Pepsi because of Ozempic?
Yeah, that's exactly my thinking.
I knew that's what you were thinking, Brown.
How much are they going to be talking about Ozempic in the earnings call? Completely.
Within the news flow right now, you don't want to make jokes about it, but at the same time, is this what we're going to see across all of earnings season? As we've heard from select strategists, it may not be so bad.
PepsiCo up by 2.75% in the pre-market. We'll hear from JP Morgan on Friday, then on to the other big banks into next week. I want to turn to foreign exchange. Rally in the bond market, yields lower on treasuries, dollar weaker, as you might expect. 3.106 briefly on the euro, back to about 105.97 on that currency pair, firmer here by 0.3%. Under surveillance this morning, the conflict between Israel and Hamas in its fourth day, with the death toll rising past 1,500. Israel saying it will respond, quote, very severely and aggressively to the attacks, while Hamas said it was willing to kill hostages if there are civilian fatalities in Gaza without warning. President Biden confirming 11 Americans have died in the conflict, with more likely being held hostage. Trying to work out the next phase of retaliation from Israel, Lisa, based on what we saw yesterday, 300,000 Army reservists building out a base near Gaza. You get the sense that it's just the beginning.
And the images are really horrific. And we've been watching this unfold. And the idea that there's more to come just leaves everybody with a sense of foreboding. And earlier this morning, some of the reporting said that additional 60,000 people were called up. So now the number has gotten to 360,000 troops in a population of 9 million in a country, just to give the size and scope, to prepare for what's coming next. I do think it's interesting when it comes to what people are watching. Bob McNally, a former White House official, said to Bloomberg TV earlier this morning, the road to an oil crisis leads through Iran. everyone watching, very much Iran, the response, and whether they will formally get sort of charged in the public court with really being behind this.
It goes back to what Halima Croft of RBC said, Tom, after the weekend. Iran, the wild card. All questions in the market go to Iran.
And Stephen Cook wasn't too optimistic about that in his comments, but I would suggest, John, there's also the domestic color here as well, which we're not seeing in the American media this morning, and that is a triangulation between Gaza, the West Bank, and the northern border with Lebanon. And I'd also underscore that there's a raging debate within domestic Israel, the blame of Netanyahu and such, and the idea of forming literally what the British would call a war government, a la Churchill, where they have what they would call a unity and emergency war cabinet.
I want to turn to the news elsewhere, TK. China considering raising its budget deficit for 2023 as it prepares a fresh round of stimulus to help the economy meet its annual growth target. This according to our reporting here at Bloomberg. China weighing issuing at least $137 billion of additional sovereign debt for infrastructure spending, which could raise its budget deficit at least well above the 3% cap set in March.
This is what everyone's been expecting. What I find interesting is that the response in currency markets isn't that great because, frankly, this is basically the base case, and a lot of people are saying it doesn't go far enough. What this highlights to me is that given where we are, deficit spending, to Tony Dwyer's point, is not going away. If anything, it's going to deepen because people who are dealing with crises, whether it's geopolitical tensions or whether it's just at home slower growth, are going to do what they have always done. They're going to borrow and they're going to spend.
And we're seeing that in the bond market, in the treasury market in a major way. TK, this one's for you. You're about to go on a big trip, the IMF.
Road trip.
Lowering expectations for global GDP. It's quite a road trip, Tom. Expecting 2.9% in 2024, down from 3% earlier this year. Despite that, the fund lifting its GDP forecast for the US this year and raising next year's estimate to 1.5% from 1%, citing stronger business investment and resilient consumption. So global GDP, Tom, hardly changed. Global inflation, that outlook, higher, Tom. So inflation up, growth down, just a touch.
Just comes off their shockingly cautious view for out to 2028, and the mandate there from the managing director is, okay, this is the view of our economists, very cautious, et cetera. Some tweaks around the corner, but how do we optimistically look out at growth? This panel that I'm doing on Friday is going to try to cast some optimism on looking out 5 years at what is actually not grim, but tepid world trade dynamics.
Would you like to describe your road trip to Morocco, to Marrakesh? How long is that road trip?
Well, the Gulf Stream has to stop. You know, I thought we could go nonstop, but we can't.
You do a stop in Europe?
Yeah, we do. I don't know. I don't worry about that. But, you know, we're going to go out. It's a great team. Francine is leading our coverage. She'll be there Wednesday. Throughout, Eric Martin leading our IMF coverage for Bloomberg News. And there's going to be some fascinating trends. To me, the most fascinating trend, witness Colby Smith's article in the FT today, is Yellen is there, and she's not showing up. She's not like me, dropping in for one day, turning around and leaving. Yellen is really committed to these meetings.
Oh, she is showing up.
Oh, yeah, Yellen's there.
Okay.
Right now.
Because you said she's there, but she's not showing up.
No, she's there. No, but she is showing up.
For anyone
Usually Treasury.
Were you confused?
No, come on.
Yeah, I was confused.
Seriously, Treasury secretaries sort of drop in, make an appearance, get a photo op, shake hands, and leave. That's not what Yellen's doing. She is really committed to the meeting, and we'll get some news out of that from our team in Washington. Right now, on the U.S. economy, Lindsay Piegza, we must look at the inflation dynamics of this important CPI report. Where's your vector on CPI right now? How disinflationary is Lindsay Piegza of Stifel?
Well, we certainly have seen ongoing disinflationary improvement in the core, but what is concerning is that recent reversal in the headline. Now, of course, the Fed is not going to adjust policy based on a temporary move in headline prices. And in fact, that's why we strip out those volatile components of food and energy so that we can get that more clear underlying trend to drive monetary policy decisions. But the concern is that we've seen now higher energy prices driving headline prices for quite some time, which eventually then leads to a reversal in the core, or at least upward pressure on the core. So that higher energy prices steeping into that core component, and that can lead to a discernible adjustment in Fed policy if we do see inflation showing less improvement towards that 2% target.
Lindsay, let's go through the Fed speakers we've heard from in the last week, one by one. Daily with Lisa, great conversation, followed up by Jefferson, by Logan, all of them seeming comfortable to outsource monetary policy in the next decision to the sell-off in the bond market. Got a reversal this morning off the back of some of that. What do you make of that, Lindsay?
Well, this is not a new message, because remember, from the Fed, the idea of policy firming was always this totality of expectations and metrics, meaning, yes, we have Fed rate hikes, but there's also an expectation for an organic change in credit conditions, financial market response to the Fed's rate hikes. And so, in fact, if we do see this backup sustained or returned, if we do see financial institutions tighten credit standards, then that total policy firming, that may get us up to that sufficiently restrictive level, do some of the Fed's work for it, and then not force the Fed to take that last tweak of an additional rate increase by the end of the year, or maybe that second round in the first quarter of next year. So the messaging hasn't changed, but it's the reaction from financial markets that has finally caused the Fed to maybe take a pause and say, we may not need to do that final action that we previously discussed.
Is the bond market wrong, Lindsay, not just with respect to recent movements, but the idea that if the Fed does pause and doesn't take an additional step, that is actually going to push yields lower, versus the opposite, that it will mean that yields will stay higher for longer because something won't break in the financial system, and so you will get this higher yield environment for long enough for it to actually hurt the companies and the individuals that need to refinance and borrow debt?
Well, that's the intention. So barring the more recent volatility as a result of geopolitics, what we do see is that fundamentals are shifting. Between the hawkish rhetoric from the Fed, investors buying into the notion now of higher for longer, coupled with the notion that deficits do matter, and financing the deficits, financing this massive expansion of the federal government's balance sheet at higher rates will have an impact of further tapping down investment and consumption longer term, as funds are then reallocated to service the debt. And we also saw, of course, the Treasury increasing quarterly issuance for the first time in 2.5 years. So all of these metrics now coming together for this eye-opening experience to suggest that we can't continue to spend unchecked, and that eventually debts do need to be repaid. So I think the mindset and the thought process is finally shifting after years and years of low interest rates, really mitigating any concerns of a bloated government's balance sheet having a prolonged negative impact on the domestic economy.
Lindsay, do you still see 10-year yields going to as much as 6% because of fundamental, not necessarily structural kinds of reasons?
I think 6% is a realistic target on a longer term basis. Right now, I don't see that happening. I do think there's still some concerns of weakness in the economy, still some concerns about international stability. But I do think that we've reset to this new normal where 4% on the 10-year, which was an extraordinary rise from where we were, is now sort of the base case, the new normal. Yeah. And I do expect this ongoing volatility between 4.5% to be sustained, independent, of course, of some of these knee-jerk reactions as events on the international stage unfold.
You know, Lindsay, everybody in the game right now is looking out long-term, like 12 weeks. I want you to look out 12 months. Good luck with that. 4 quarters out, deep into 2024. You're going to have a real GDP crystal ball, add inflation to it. You've got nominal GDP, which I'm going to call the corporate animal spirit of America. What's our animal spirit going to look like next year?
I think when we look out for the economy, that longer-term trajectory of growth, I struggle to model anything above 2% real growth. You layer on the fact that the Fed is going to have a very difficult time getting inflation under control, so we could see a longer-term trend of above 2%, maybe nearer 3%, and you're talking about a real rate, or excuse me, a nominal rate closer to 5%. But wow. Again, that's on a longer-term basis. And I do think that, to your point, Tom, that's where we need to be looking. So often we're focused on, are we going to sidestep a recession in the next 6 to 9 months? That's like focusing on the last 2 minutes of a 10-hour run. We need to take a longer perspective in terms of some of these issues that are underlying in the domestic economy. The impact of AI, the demographic change, the massive wealth gap between asset holders and non-asset holders, not to mention our international reliance as we look out to conflict. How is this going to impact the fertilizer, food industries, oil industries? And so these are some of these subcomponents that we need to focus on to have a better perspective of the longer term trajectory of the domestic economy.
I mean, it's very good. Lindsay focuses on the last 2 minutes of a 10-mile.
Sounds like a brutal run, doesn't it?
Yeah, well, you know, the last time I did 10 miles.
You've got that, TK.
Last time I
run.
did 10 miles, Nixon was president.
We can make that happen. We'll raise some money. We'll do it for charity. I'll do it with you. Brammo would crush us.
Brammo would crush us. This is true.
Without a doubt. Lindsay Piegza of Stifel.
She
Lindsay,
comes
thank
out
you.
of the building. She
Thank
stops
you very much.
traffic on Lexington Avenue.
You and I sort of stumble outside of work and Brammo runs past us.
It's releasing the energy.
Every single day. Every single day. What do you make of that? The last 10 minutes of the last 10 hours. On a serious note, we are focused on that for good reason. Morgan Stanley expect that last 10 minutes in Q4. They're looking for a pronounced slowdown to turn up in the back end of this year.
We have a technological superiority, but it's only being applied to part of the population. That's the heart of the matter. How do you expand that out to the have-nots of technology?
We've got a big bond market rally on our hands today. We're down about 13 basis points on a 10-year yield. Coming up next on this program, Ed Al-Husseini of Columbia Threadneedle Investments. That conversation is coming up next.
Sports and money. They've always gone together.
But never before have sports been so massively influential and as lucrative as they are today.
NFL, NBA, none of them were what they are today when they were born.
There's leagues that are being thought of and built every day.
New teams, new leagues, new business models, even entirely new sports.
I never in a million years would have thought this is what my life would be like.
We set out to find what's happening and what's about to happen at the nexus of business, sports, and culture.
Getting involved from a business perspective was something that was very natural and an easy transition for me.
From the pickleball courts of Arizona
to the kabaddi tournaments in India
to the cornhole boards at your local tailgate. This is what's next in sports.
Next week on AI IRL.
I do think it has a tremendously positive effect on democratizing technology. I mean, just imagine what it must feel like if you are a country in Latin America, Sub-Saharan Africa, or in other parts of the world where you just don't have either the money, because you need a considerable amount of money, or the very significant GPU computing capacity, or the data to build any of all of these things.
What I think about is the real rate that is required to bring our aggregate supply back into balance with aggregate demand. I think current policy is restrictive and putting downward pressure on the inflation rate. And that's really what my concern is.
That was the Fed Vice Chair Philip Jefferson speaking at the National Association of Business Economics over in Dallas. The Vice Chair sounding like he might be done, given the sell-off we've seen in the bond market over the last couple of months. That sell-off doesn't look like a sell-off right now. It's a rally. Yields are lower on a 10-year by 13 basis points, 467 in the FX market. Weaker dollar, stronger euro, just short of 106, 105.97, with positive there by a third of 1%. A helping hand to the equity market, Tom. Potentially a third day of gains on the S&P, up by a quarter of 1%.
Well, it's a reflex rally. You know, you end up doing a standard deviation analysis, and I don't want to make too much of it. Again, bonds, equities, the same story, huge moves, and we've had a little bit of a reversal, but I got to see more, and maybe we'll get that off inflation, as Lindsay talked about on Wednesday.
And just to finish on crude with the best day since spring for the performance yesterday. Big one-day rally. Crude right now negative by 0.4%, back to 86. So not a sustained rally, Tom, following the tension, the brutal attacks over the weekend.
Well, we'll have to see on that. We've got many good guests coming up here. We have an AMH coming up in 30 minutes, right?
In the next hour?
Yeah. So we'll have to see from her, and also an important guest from London here on the war that we see in Israel. Right now joining us here, and is perfectly timed, is Ed Al-Husseini, Senior Interest Rate and Currency Analyst, Columbia Threadneedle. and far more importantly, tours of duty at World Bank and IMF as well. Lisa and John have some more narrow questions about where are we right now with rates. I want you to dovetail in what Eric Martin reports for Bloomberg News from Marrakesh, which is a really moldy global GDP outlook. How does the real economy, global economy, and world trade, how does that affect the yield forecast?
Yeah, I think it's a fantastic example of the U.S. being a significant outlier to what's going on in the global economy. The U.S. is relatively closed. The dynamics driving rates here are really focused on the domestic inflation story and, more recently, a little bit on the domestic fiscal outlook. What's going on globally is very, very much in the background. And you can see in the course of 2023, significant slowdowns in Europe, in Germany in particular, slowdowns in China, very little spillover into the U.S. rate market as a result.
I look at where that global call is, and I look at the rate dynamic, and it comes to the inflation-adjusted rate, the real rate. Is the real rate now in the United States, however you want to measure it, is it ample? Is it enough to affect the economy?
I think it is. And first and foremost, look at it through the lens of what's happened to the inflation story, right? The inflation has been on a very healthy trajectory down. It's declined a lot faster than I think both market participants and the Fed anticipated. And that's, exhibit number one in terms of monetary policy being quite effective and quite restrictive at this point. You look at it globally, and the dollar, particularly the strength of the dollar and where interest rates are today, has played a significant role in slowing the global economy. I think it's been less successful in slowing the U.S. economy, but that, I think, is a matter of time.
One sort of wild card in this, Ed, is a lot of people are talking about how a lot of major economies would stop spending so much when rates got to a certain level, and given how much deficit has been built up over this period of the pandemic. I wonder about that. Do you really believe that there is going to be any kind of spending cutback or just an acceleration of spending with the hope that rates will eventually come back down because there is no tolerance for weakness, as we are seeing again and again?
I mean, it's such a difficult question because so much of it depends on political outcomes. We have an election coming up here in the U.S. Will that refocus Congress on fiscal policy and potentially, pulling back on the discretionary bits and pieces of spending into the future? Really, we don't know. It's premature, I think, at this point to look at fiscal policy either here in the U.S. Or fiscal policy writ large, China, Europe, and conclude that just because interest rates have risen in the course of the last 6 months or so, that's going to refocus us on pulling stimulus back and getting to a place where fiscal deficits are much smaller. I think that's an open question at this point.
Well, and Ed, to that point, a lot of people traditionally have said, we can't predict the government. We can't predict some of these geopolitical events. So we're going to ignore them. We're going to basically go toward history and just chug along as though all things are being equal. Do you sense that has changed? That suddenly people are believing in this idea that deficits are going to be bigger, that yields are going to have to be higher, and that there is going to be a premium that all of these different bond investors, bond vigilantes, whatever you want to call them, are going to charge because of this?
It's early days. Let me put it this way, right? The term premium story has got a lot of attention in the course of the last, 3 or 4 months. Of course, it's coincided with Treasury issuance being bumped up, not just this year, but very likely next year as well, to accommodate the level of borrowing that we need. Will the term premium story be the main driver of interest rates? I don't know. It could shift back to the Fed if we have a recession. It could shift back to the balance sheet if quantitative tightening stops at some point next year. I think the key point for policymakers, particularly on the fiscal side, is to make an assessment of whether our potential growth can sustain the current level of deficits. The answer to that has been affirmative for decades. We've not been in a place where deficits have been unsustainable. We've been easily able to cover debt service. That equation might be changing on the margin, but really what we have to do is to assess where's the direction of travel for growth? That is question number one. And we have significant investments happening right now in infrastructure, in manufacturing, in the green transition. I think, again, it's an open question about whether that will deliver the kind of productivity boost that will take fiscal deficits to a sustainable place. Again, all of these remain open questions. I don't think they're enough to pressure policymakers to refocus on the fiscal deficit side of the equation right now.
And the official line, witness say John Williams with a move of our start back to wherever it was, 2%, whatever the number. A is who's keeping score. But the basic idea is some form of reversion to the great moderation. The chart doesn't show that. We are distant from the great moderation. Have you just given up on the idea that we can get back to what we knew?
Again, such a difficult question because we're still at the tail end of transitioning out of the dislocation that happened after COVID, both in terms of monetary policy, fiscal policy, the resulting inflation. All of these are still in the system. And I think the economy is still in the process of adjusting to the shocks that we had in the course of the last several years. Again, our star is essentially a shortcut for productivity. If productivity improves, if the underlying structure of the economy is changed coming out of COVID, and we can sustain higher rates for longer, then of course the current level of rates is going to impact the fiscal side of the equation. There's the possibility that fiscal deficits become unsustainable and will require a very sharp correction, a very sharp pullback in spending, and potentially a combination of higher taxes as well. I think this is very much an open question. It's really premature right now to look at some combination of demographics, productivity, globalization, and conclude that we know enough to say, yes, in fact, the economy is now in a place where productivity is higher and we can sustain much higher interest rates for longer.
Ed Al-Husseini there of Columbia Threadneedle Investments on some big themes to end the conversation. Ed, thank you. Big rally of the bond market today, down about 13 basis points on a 10-year. Big week ahead, kind of snuck up on us. We've got bank earnings on Friday, PPI data tomorrow alongside FOMC minutes, then CPI Thursday, Tom, the big data point of the week.
You know, CPI is a big data point, but to Pepsi this morning as well, I mean, earnings in the analysis of securities has been pushed aside by the news flow. And our job will to stay on top of it, not just for the bank earnings coming out. What is it, 3 or 4 days? We get that through the weekend and into next week as well. But then everything afterwards is going to be a complete mystery.
In the next hour, Tom, in the next couple of hours, and much more on the latest in Israel. The National Security Council spokesman, John Kirby, joining us at 8:45 Eastern Time. We'll get an update for you from Tel Aviv as well, from our bureau chief on the ground in Israel. That conversation about 10 minutes away. Stuart Kaiser of Citi joining us on the equity market too, on a big week for economic data and for earnings, Tom, as well.
Well, Stuart Kaiser, he reforms. You wonder in the outlook. How do you write your outlook right now? You don't. Can't do it.
Beyond next week?
Can't do it.
Almost impossible. Equity futures positive by 0.2%. A lift in the equity market, a rally in the bond market. Yields are lower, the dollar's weaker, the euro just short of 106, 105.94.
Our studios in New York and San Francisco. Our expert hosts of the data and analysis about the companies you know and the startups to watch. Plus, the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. 12 p.m. on the East Coast, 9 a.m. in the West. Only on Bloomberg Television, your global business authority. From the world of politics,
we're not going to be relying upon countries whose values we don't share.
To the world of business.
It's all about corporate power at the end.
Balance of Power, live from Bloomberg's Washington headquarters.
We're going to be more excited what's in store for you.
How long will it take? How many years? Why don't we take this one day at a time?
Good luck. Everybody has a perspective.
Every weekday at 5 p.m. Eastern Time. Join host Anne-Marie Hordern.
It's the one area, really, of bipartisanship.
Well, I think we're getting more of it.
That's optimistic.
And Joe Matthew.
The debt ceiling is looming. How close are we going to get to the line before you start to worry?
Alongside Kaylee Langs.
The door was open for regulators to do more. And that puts the Fed between a rock and a hard place.
As they deliver news.
This is such an important economic issue.
He's no longer trying to run away from
That
it.
really blew some minds.
Insight.
We can both invest in law enforcement and also make sure that communities feel safe in their own skin.
And analysis.
I think your audience will get this more than most.
This is not the Republican Party that you know.
It allows him to do what he did so successfully in 2020, which is run against crazy.
From and about politics' biggest power players.
This was the zombie case, and it's now more than well alive.
That's for sure. With two more potentially to come.
I'm willing to have this battle.
It is vitally important.
This is the intersection of Washington and Wall Street.
Bringing people directly to the decision makers
Right.
that impact your investments and your life.
Balance of Power, every weekday at 5 p.m. Eastern, only on Bloomberg, your global business authority.
The boundaries of the entertainment world are blurry, and they're all scrambling for the same thing, screen time. And navigating this multiverse is no simple task. At Bloomberg Screen Time, it's culture, business, converged. Bloomberg Screen Time, Naya Studios, Los Angeles, October 11th and 12th. Get your tickets at bloomberglive.com/screentime.
From New York City,
From London and Sydney.
from Washington,
In Tokyo.
9 a.m. in Beijing and Shanghai.
Good morning, everyone.
Have a great evening.
Here's what I'm watching.
You do not want to miss this
Is
story.
there the kind of upside?
The top names in business are on Bloomberg.
I see a world where financial conditions have gotten tighter, and the transition mechanism, which the Fed would like to see in slowing down the economy, which we all expected, it's taken a lot longer. So the real impact of higher costs around the globe, in the U.S. and Western Europe, it's not been felt yet. And so when people say, well, we're going to have a soft landing, I'm skeptical.
Nobody covers business like Bloomberg. Context changes everything.
We are really, I think, on the verge of a larger geopolitical regional conflict.
What happens next? And does this spread? Does it become a wider regional conflict? And that has all kinds of implications.
The extent to which this broadens out into kind of other regions is kind of critical.
Psychologically, there certainly has been a bit of a pullback.
the buyers right now are waiting on the sidelines saying, why would we catch this particular knife?
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Big rally in the bond market, live from New York City this morning. Good morning for our audience worldwide. This is Bloomberg Surveillance on TV and radio, alongside Tom Keene and Elisa Abramowitz. I'm Jonathan Farrow. Your bond market this morning looks like this. Yields lower by 12 basis points, 467 on a 10-year yield. Tom missed out on the haven flows yesterday, given the Treasury market was closed. Pick up on that this morning. Throw in some dovish Fed speak as well.
Yeah.
You've got quite a rally.
I think the dovish Fed speak was maybe the thing that put it over the top, but I really want to make clear, as I said in the last hour, if you look at the fan distribution of what we've been through the last couple of weeks, John, we've barely made, we're not even near mid-trend. I mean, we've come back 13 basis points is a talking point here. The 210 spread has come back 4 basis points for further inversion this morning, but it's pretty much a nudge back. I wouldn't say it's the center tendency.
Andrew Hollenhorst, Citi, just publishing a dovish turn. Lisa, we've been surprised at the relatively unified dovish response of Fed officials to this rise in longer-dated yields.
Andrew Hollenhorst and the team over there has been calling for an additional hike in November, and this seems to be maybe tiptoeing away, maybe, from this tape. But what I thought was interesting is in this note, he says the attempt to control longer-term Treasury yields through rhetorical intervention is unlikely to be successful in the long term. In other words, all of the shocks that we're seeing are likely to be inflationary, not disinflationary, and really going forward, that is their focus.
The latest on the ground in Israel just moments away. Let me turn to the price action before we get there. Equities with a lift, up 0.2% on the S&P. Bonds with a rally, yields down hard by 12 basis points. Crude higher yesterday, lower this morning by 0.5%. Lisa, WTI 85.96.
Today we get a slew of additional Fed speak to follow on what we heard yesterday and last week, including Atlanta Fed President Raphael Bostic, Fed Governor Chris Waller, Minneapolis Fed President Neil Kashkari, as well as, again, San Francisco Fed President Mary Daly. Do they reaffirm this feeling that the bond market is doing their work for them, even as the bond market responds to that, perhaps, and goes the other direction? 10:15 a.m., we hear from U.S. Treasury Secretary Janet Yellen but she is going to be in Marrakesh in Morocco at the IMF annual meeting. She is going to be up north, I believe, before she heads to Marrakesh, speaking about what she sees going forward in terms of lending. Also, though, how does she coalesce allies and this sort of feeling around the IMF and the World Bank at a time of sort of splintered alliances? And today at 1 p.m., we do hear from President Biden on the situation in Israel.
Lisa, thank you. Looking ahead to that, here's your top story this morning. The war between Israel and Hamas in its fourth day with at least 1,500 dead. The Israeli military responding with strikes in Gaza overnight and reclaiming control of the towns near the border. Hamas threatening to kill hostages if civilians in Gaza are killed in strikes without warning. President Joe Biden confirming at least 11 U.S. citizens have died in the conflict and Americans are likely among the hostages being held. Joining us now is Bloomberg's Israel Bureau Chief, Ethan Bronner, joining us now from Tel Aviv. Ethan, good to catch up with you once again, sir, this hour. Let's walk through where we are now, the response we've seen so far, and the escalatory steps you're expecting in the not-too-distant future.
So, as you said, the Israelis have gathered hundreds of thousands of troops on the edge, on the border of Gaza for an expected ground assault. They have been bombarding from the air for the last couple of days. The Americans are sending aid. I think it's going to help with the Patriot missiles, the anti-missile system, and as well as aerial ability to target things. And there's some basic equipment that soldiers need as well. The big question is, will this be limited to Hamas, or will Hezbollah in the north get involved once Israel goes all into Gaza? And it's very hard to know, but the situation is going to be quite dire in Gaza. Israel has cut off electricity and water, and there's no place to go anymore because the Rafah exit at the end toward Egypt has been closed off as well.
Ethan, have you sensed a change in tone toward Iran and their potential involvement in this attack? I mean, there's a question around whether publicly officials in Israel, in the U.S., want to blame Iran because then it would necessitate some sort of more aggressive response.
That's an interesting question, Lisa. I mean, my instinct is that, in theory, and assuming it is not messaging, that they have not, in fact, been able to determine whether Iran had a specific hand that actually led this attack, this massacre that occurred on Saturday in Israel. So I'm not sure that they're playing around with calling it in order to decide whether to hold them responsible or not. My understanding is they weren't able to link them directly to it.
Ethan, away from the war, there is talk of a coalition government. I mean, it harkens back to the United Kingdom in 1940. We don't need a long dissertation, but we need the Bronner treatment on the party of Sharon getting together with the party of Rabin from 30 and 40 years ago. Can you have some form of emergency government in a fractured domestic politics?
You can. It's interesting you drew the analogy with the UK. The analogy drawn here is 1967, when Menachem Begin, who was considered a complete loser at that time, joined the Labour government to wage the Six-Day War. There's no doubt that this is a very fractured political place, but there's also no doubt that they are held together deeply by a sense of mutual survival in the face of enemies. And when you see the kind of pogrom-like killing that occurred on Saturday, the tribal instinct starts to win out over all the discussions of who gets to be the coalition. So yes, I believe there will be a coalition emergency government, and I believe they'll stick together for the duration of the war. I doubt it will last after the war.
Ethan, thank you, sir. Thank you very much. Thanks for being with us, and hopefully we can catch up soon. Ethan Bronner there on the latest from Israel. The View from the White House with John Kirby of the National Security Council at 8:45 Eastern Time. That conversation a couple of hours away. Just to turn back to the price action, a potential for a third day of gains on the S&P 500. With us around the table, Stuart Kaiser, head of US equity trading strategy over at Citi. Stuart, I've said this a few times already this week. We'd be waking up on Monday talking about the jobs report from Friday. The fact that the data's good and we're talking about something else. Can we just sit on the data for a moment? Good news for you and the team. You've said that a few times. It looked like it was on Friday.
Yeah, I think we're still in that camp. I was a little surprised by the response on Friday. I thought with the jobs number that was so strong, we might see bond volatility kind of hold equities back for a bit. It held them back for about 15 minutes, and then we kind of went back to normal operations. So, as we sort of said, Friday encapsulated our view on how markets are going to respond to this data, which is if the data is very strong initially, you might get yields higher, and that could be a headwind for equities. But big picture, equities like a stronger economy, and you would expect them to kind of, reorient to that as well. And I think both payrolls and the ISM report last week, kind of played into that narrative.
Stuart, PepsiCo reports third quarter results, raises full year EPS, and provides initial constructive 2024 outlook. I'm going to go back to your phrase, which I love. It's a typical phrase you see from a guy like you, solid growth. Okay, what does that mean? I mean, you are the optimist. People right now are scared stiff for 8 different reasons. Define solid.
I think for at this point, solid would be, you don't go into recession, right? You get an actual soft landing.